Hello. Sure. Very good morning, everyone. How are you all? Super fine. Now, today we will take which Ind AS? Batao. I've already informed you. So we'll take Ind AS 21, Ind AS 21, Ind AS 7, Ind AS 108, Ind AS 1, Ind AS 8, and there is one more Ind AS 19. Ind AS 19. Okay. So these are the Ind AS which we'll take today. Okay. Now from this all Ind AS question may be asked. Acha, I am coming to the MCQs, but let me say something first. So what I am saying, from this all Ind AS question may or may not come. But if the question will come, that will be super easy. Means from my point of view, question will be from from the book only. Normally from this chapter they don't create any question. Even though they create any question, you can apply concept, you can do it. That will not be difficult. But you need to retain the content. From my point of view, if you have less time, then if you read the content of Ind AS, then also you can do it. Correct? Okay. Now let us first come to the MCQs doubt. If you have, so one doubt came in Ind AS 2. Am I right? What was the question number? There was some typo mistake in that. Let me correct that. So typo mistake will come because for the first time I have released MCQs and I have also not gone through all the MCQs. Okay. So typo mistake may come, and that will be in every book. That will be in every book. Means Ind AS Saaransh book is my 4th edition, but there also after so much corrections we are getting some typo mistakes. Correct now? The typo mistake will be there. So no book is without mistakes. Understood? So Ind AS 2 na. Ind AS 2 mein aa jao. Question number 16. Question number 16. So in this actually the option was not given correct. It was given Vanessa Private Limited has appointed you as an auditor. They are into the trading of cake mix. The cake mix is brought in the boxes, whether these boxes will fall within the meaning of inventory as per Ind AS 2 and how it will be valued. So can you say once the box become empty, so can you say, and it is not given that it will be held for sale in the ordinary course of business. Means I have given one example in my classes about jute bag, if you remember. So if jute bag is held for sale in the business only, then it is ordinary activities only, that will be considered as inventory. But in this case nothing has been mentioned about that boxes. It may be boxes of what, some which cannot be used, therefore it cannot be considered as what, inventory. So no, it is not inventory, and they will not qualify as inventory and will be valued at NRV. It can be it will be just like a scrap material. It will be just like a scrap material and it will valued at what, NRV. So option number 2 is correct. Option number 2 is correct. If the same thing, suppose there is some tin box. Suppose it is in the tin box, and tin box can be sold in the market. Correct now? Sold in the market. One question came in CA final old scheme syllabus when we used to do. The question was like that: the vendor was a vendor of what? Liquors. You know liquor? This question came in the exam, therefore I am saying liquor. So normally what happened, the customer will go to the bar, they will drink the liquor and they will leave the what, empty bottle there only. So whether that empty bottle which is held for sale, now that empty bottle will be under the control of what, vendor only, and that will be held for sale in the ordinary course of business. So that empty bottle will be considered as what? Inventory, because it will meet the definition. It will meet the definition. But here nothing is given about that boxes. Therefore, option number 2 is the more appropriate answer. Chalega. Next, any one more doubt? Any more doubt? In any India? No doubt? Chalo. So no doubt is there. Let me see whether live class student have any doubt. So they don't have also any doubt. Chalo. So we'll start Ind AS 21. Ind AS 21. Now Ind AS 21 is very simple. Now in this Ind AS 21 we have actually two topics. One is related to foreign currency transaction and one is related to foreign operation. Now when we say Ind AS 21, so as per Ind AS 21 there are three currencies. One is known as functional currency. FUC means what? Functional currency. Second is known as presentation currency and third is known as foreign currency. So functional currency is those currency in which books of accounts are prepared. Means all the transactions are recorded as per which currency? Functional currency. Means you will prepare your books of account as per functional currency. But you will present your financial statement as per which currency? Presentation currency. So your financial statement will be presented as per presentation currency, and foreign currency is the currency other than functional currency. Normally, can I say in normal situation, functional currency and presentation currency will be same, but functional currency and presentation currency can be different also depending upon some parameter given under Ind AS 21. Means if this is rupees, normally this will be rupees in India, but functional currency may be dollar also. It can be euro also, but the presentation currency in India will be what? Rupees only. As per Indian regulation, the presentation currency will be what? Rupees only. Understood? So this become the, I will say, the background of this chapter. 1 minute, let me first check some doubt came. Please explain CFS example on page number 363 and 378. Chalo, I'll come to this example after Ind AS 21. Okay, sir. Also in chart on page number 369, condition are not satisfied, then JC, joint control does not exist. Right. Chalo, I'll come to this point. Okay. Whatever you are showing, I need to go to the page. So after this chapter, I'll go to Ind AS 21. Okay, sir? Yes, sir. Now, what is that condition to identify what? Functional currency. So, what are the two conditions they have given? One is primary conditions, means primary factor, and second is what? Secondary factor. Primary factor will be given more importance than what? Secondary factor. Means secondary factor can be used only when you have a doubt about what? Condition given under primary factor. Means secondary factor cannot be used in isolation with what? Primary factor. Understood? So what are the two primary factor? It is given in para 9. So para 9 they have given two factors. First is the currency that mainly influence the sale price of goods and services. So any currency that mainly influence the sale price of goods and services, that become what? Functional currency. Second, the currency that mainly influence the cost of providing goods and services. Cost of providing goods and services means material cost, labor cost, any other overhead cost. So the cost of production is denominated in which currency? That become what? Functional currency. So when I say the currency that mainly influence the sale price of goods and services, it means what? This will be the currency in which sale price of goods and services are denominated and settled. So what they are saying, that two word, denominated and settled. Second, the currency of the country whose competitive forces and the regulation mainly determine the sale price of goods and services. So we need to see the currency of the country whose competitive forces are taken into consideration for determination of what? Sale price. Understood? For example, any company is in India and the price is based on the competition in the local market of India, then it means Indian currency become what? The functional currency. But suppose any Indian company is what? Operating in Europe, and the price of that goods and services based on the Europe regulation Europe competition, then euro will become what? Functional currency. Euro will become functional currency. But can you see from examination point of view, this will depend upon the information given the question. This will depend upon the information given the question. Means there can be three situations. If this is rupees, this is rupees, then the functional currency is rupees. If this is dollar, then functional currency will be dollar. But if this is rupees and this is dollar, then doubt will come. Or this is dollar and this is rupees, then also doubt will come. Are you able to understand? So in this case, whenever there is a doubt about primary factor, we'll also consider what? Secondary factor. So whenever in question you have doubt about which one is functional currency, so they will give you some information about what? Secondary factor also. So what are the two secondary factor? First, the currency in which funds from financing activities are generated. Means you need to see that you have taken loan or you have issued share capital in which currency, and normally currency will take fund in the currency in which we are going to operate. So the currency in which funds from financing activities are generated. Second, the currency in which the received from operating activities are retained, not collected. Collected can be what? Dollar. But if you are retaining in INR, so INR become what? The functional currency. It is retained. Understood? You collected in Indian currency, but you are retaining in dollar, then dollar become what? Functional currency. The currency in which the received from operating activities are retained. But these two will be used only when you have a doubt about what? Primary factor. Once you have identified functional currency, that functional currency will be used for recording all the transactions. Only for a new company this is going to determine. For an existing company it is already has been determined. So normally from practical point of view, it will not be determined every year. So when a company is incorporated, at that point of time, we should decide about what? Functional currency. Now one doubt will come, sir, can we change the functional currency? Bula, normally we should not change. The functional currency once determined should not be changed unless there is a change in the underlying transaction based on which functional currency was determined. Means you have changed the scope of business only. Then only functional currency is supposed to be changed. Correct? Means once determined it should not be changed, but if the underlying transactions are changed, then we can change the functional currency, and such change will be changes in accounting policy, changes in accounting estimate. So that will be changes in accounting estimate. Means accounting will do on which basis? Retrospective basis or prospective basis? Prospective basis. So we'll do accounting on prospective basis. So what they want to say, that entities shall translate all item into new functional currency using the exchange rate on the date of change. Means suppose 31st March 2023 is the date of change, and your initial functional currency was dollar and now it become rupees. So you will take the exchange rate on this date 80, and based on this rate you will translate all the item of financial statement. Can you see when I am saying all the items, so normally it is asset, liability and equity. So can you see you will translate all asset, all liability, equity by using which rate? Exchange rate prevailing on that date. Correct. Now the question is that difference will be, any difference in this balance sheet will be transferred to what? PL or OCI? Any difference in this financial statement will be transferred to what? PL or OCI? And the like difference will not come. ठीक है ना? Whether difference will come? If you are translating by using 80 and 80, whether difference will come? Difference will not come, and therefore no reference has been given about difference under Ind AS 21. Therefore this type of question they are not asking in exam, because there is no difference only. All item will be translated by using which rate? Using the exchange rate on the date of change. But from my point of view, if they ask this question, most of the students will do wrong, because can I say they will apply the concept of translation of foreign operation. Correct now? So be careful. Till now not asked in exam, but they can ask in exam. So you need to use only one rate for translation of all the item in the balance sheet, and no difference will come. But one clarification has been given that this asset may be non-financial asset also, and non-financial asset are normally measured at cost price. So what they are saying, the translated amount will become the cost price. The translated amount for the non-financial asset will become the cost price. So resulting translated amount of non-monetary item या non-financial asset, non-monetary item are treated as what? Their cost. चलेगा? Yes sir, this you have understood. So we have understood primary factors and secondary factors. Now one question is that how to identify the functional currency of foreign operations. So foreign operation means what? Foreign associate, foreign joint venture, foreign subsidiary, foreign branches. So for that purpose, what will be their functional currency? So what they are saying, this depend upon two factors, whether they are dependent or whether they are not dependent, whether they are dependent on Indian reporting entity or whether they are not dependent on Indian reporting entity. So how can we understand whether they are dependent or not dependent? So they have given some factors. They have given some factors. If any one factor satisfies, means they are dependent. If no factor satisfies, means they are independent. Understood? They have given some factors. Factors are what? If foreign operation does not have any autonomy in its operation, means it is totally independent. Correct now? Foreign operation does not have autonomy in its operation. Sorry, it means they are dependent. It means they are dependent. Foreign operation does not have any autonomy, means they are dependent on whom? Indian reporting entity. Foreign operation has high transaction with the reporting entity, dependency. Cash flow from the foreign operation directly affect the cash flows of reporting entity, dependency. Cash flow from foreign operation are not sufficient to pay their obligation unless supported by reporting entity, means dependency. Means simple word, if they are dependent, then what they are saying, the foreign operation will have the same functional currency as their reporting entity. It means if the reporting entity is having rupees, so foreign operation of functional currency of foreign operation will be also rupees. If this is dollar, so this will be also dollar. So in this case, can I say if they have same functional currency, then no translation required for preparation of consolidated financial statement. So in this case, no translation will be required. But if they are independent, means if no factor satisfied, so they become independent. In that case, we need to identify the functional currency of foreign operations separately by applying para 9 and para 10. So we need to identify the functional currency of foreign operations separately. In that case, can you see there can be any situation, means if I am saying reporting entity and foreign operation, so if this is rupees, this can be also rupees. If this is dollar, this can be also dollar. If this is rupees, this can be dollar. If this is dollar, so it can be what? Rupees. But we need to identify the functional currency of foreign operations separately by applying para 9 and para 10. Para 9 and para 10 means what? Primary factor and secondary factor. Correct? Can you see in these two situations, can you say for consolidation purpose, translation is required? So we need to translate the financial statement of foreign operation as per the functional currency of reporting entity. So how to translate, that will be a different point we'll discuss in the later points. Understood? I hope you have understood this point. So one question, I think MCQ based question can be now based on this primary factor and secondary factor. Chalega? Yes sir. Now once you have identified the functional currency, then the second topic is what will be the accounting treatment for foreign currency transaction, is at which amount it will be recorded in books of account. Correct? If you have done some foreign currency transaction, so any transaction which is denominated in foreign currency become foreign currency transaction. Foreign currency is a currency other than functional currency. So it means if the functional currency is dollar, then foreign currency will be rupees. If the functional currency is dollar, then foreign currency will be rupees. So any transaction which is denominated in foreign currency, that become foreign currency transaction. So for that transaction, for recognition purpose, it has been divided in two parts: initial recognition and subsequent recognition. Initial recognition and subsequent recognition. So initial recognition is done at what? Transaction date exchange rate. Transaction date exchange rate or average rate So transaction date exchange rate or average rate. Now this average rate means what? This average rate means what? Normally average rate you think that it is what, average of the entire year, but this is not the average of entire year. Practically this is the average. It can be either weekly average, or it can be monthly average, or it can be quarterly average, but this is not yearly average. Understood? So this can be either weekly average or monthly average or quarterly average, but from exam point of view, whatever average rate is given the question, that only will apply. And normally they give yearly average from examination point of view, but practically it is not yearly average. Understood what I am saying? So it can be what, transaction rate, exchange rate, or average rate. Transaction rate, exchange rate, or average rate. Suppose in exam both are given, transaction rate, exchange rate, or average rate, which will be more preferred? Transaction rate, exchange rate. Means average rate will be used when what is not given, transaction rate, exchange rate is not given. Chalega. Now subsequent recognition. Subsequent recognition means what? Subsequent recognition means what? Recognition on either reporting date or settlement date. Either reporting date or settlement date. It is quite possible settlement date is before reporting date or settlement date is after reporting date. Then there will be two dates, reporting date as well as settlement date. Correct? For this purpose, for the translation on subsequent recognition, all the items has been divided in two parts. First is known as foreign currency monetary item. Second is known as foreign currency non-monetary item. So can I say any monetary item denominated in foreign currency become foreign currency monetary item? Any non-monetary item denominated in foreign currency become foreign currency non-monetary item. Of course, for this chapter we are not worried about functional currency monetary item or functional currency non-monetary item. So we are only worried about foreign currency monetary item and foreign currency non-monetary item. So first let us understand what are monetary item, what are monetary item. So what is the meaning of monetary item? Monetary item are assets or liability, which have fixed or determinable. Fixed means fixed price, determinable means it can be estimated. It is estimated amount. I hope you have understood. Which has fixed or determinable number of units of currency which are realizable or payable in any currency. If I am saying any currency, so it will include all monetary items. Any currency means all monetary item. It can be functional currency, it can be foreign currency, that become monetary item. But here we are only concerned about foreign currency monetary item. Therefore it should be denominated in what? Foreign currency. Therefore foreign currency monetary item are those assets and liability which are realizable or payable in foreign currency. When I say foreign currency means what? Only in the form of cash. Only in the form of cash, not cash equivalent. Means if it is realizable in the form of cash equivalent, that is not foreign currency monetary item. When I say cash will include checks also. Cash will include checks, but it will not include what? Cash equivalent. So it should be realizable or payable in foreign currency. Only foreign currency. Understood this point? In simple word I will say any receivable or any payable. Any receivable or any payable which are realizable or payable in cash, and if that cash is what? Foreign currency, that become what? Foreign currency monetary item. In simple word. Understood? Correct. So any assets or liability which will not meet the definition of monetary item will become non-monetary item, and that is denominated in foreign currency, that become foreign currency non-monetary item. So first, this is also important from exam point of view. Now with MCQ they can ask this type of question: identify monetary and non-monetary items. Just go through this example. If any doubt you ask me. Bata. Any doubt? Pre-received income. But the pre-received income means you have received in advance So that will be settled in cash, or that will be settled in by providing goods or services. Suppose I receive advance coaching fee from you, so I will give you the cash or I will give you the services. So it will be settled in what? In by providing goods or services. Therefore it is a non-monetary item. Same thing is for what? Prepaid expense also. Any more doubt? Same thing, advance from customer, advance to supplier. Same thing. Inventory is monetary, non-monetary. Inventory is monetary, non-monetary. Inventory is non-monetary item. Then provision for warranty, you understood? Provision for warranty, it will be settled in what? By providing goods or services. Therefore it is a non-monetary item. But provision for legal damages, it is payable in cash only, so that become monetary item. This liability and equity component, I hope you have understood. I think no other doubt. Chale? Tax. What? 10th. 10th is what? Redeemable preference share capital. This one. So it is redeemable and it will be redeemed in what? Cash or goods or services. It is payable in what? Cash only. Not so redeemable means it is payable in cash. Therefore it become what? Monetary item. Chalega? Okay, sir. Any more doubt? No doubt. So I hope you have understood what are foreign currency monetary item, what are foreign currency non-monetary item. Now let us come to the translation rule. So any foreign currency monetary item will be translated by using which rate? Closing exchange rate. By using closing exchange rate. Now what do you mean by closing exchange rate? What do you mean by closing exchange rate? Huh? The closing exchange rate does not mean reporting date rate, because I said it is what? On reporting date as well as what? On settlement date. So you can't say balance sheet date rate. Closing exchange rate means that day whatever you are doing translation will take closing rate of that particular day. So every day have some opening rate as well as closing rate. So will not take average, will not take opening, will take what? Closing exchange rate. So closing exchange rate of that particular day. It can be reporting date, it can be settlement day also. Understood this point? Correct. Now for foreign currency non-monetary item, there are 2 points. If they are carried at cost, then no translation required, because they are carried at cost. Then no translation required, or we can say it will be translated by using the rate which has been used for initial transaction, initial recognition date. So no translation required. But if they are carried at fair value, then it should be translated by using the exchange rate when the fair value was determined. Understood? So carried at fair value, it will be translated by using the exchange rate when the fair value was determined. This is important from examination point of view. Chalega? Understood? Now can you see, due to this translation subsequent recognition, there will be some difference. There will be some exchange difference. So what Ind AS 21 says that for foreign currency monetary item, any exchange difference either on settlement or on translation at reporting date, that difference will be transferred to always what? PL. Always PL. But for foreign currency non-monetary item, can you say exchange difference will not arise in this case, but exchange difference will arise in this case. Means whenever they are carried at fair value, then only exchange difference will arise. So in that case, what they are saying, exchange difference will be recognized based on the revaluation gain or revaluation loss. If the revaluation gain or loss has been transferred to PL, then exchange difference will be also transferred to PL. But if revaluation gain or loss is transferred to what? OCI, then exchange difference will be also transferred to OCI. Can you give me an example of point number 1, OCI? It is property, plant and equipment. Can you give me some example of what? Where revaluation gain or loss has been transferred to PL? Biological asset. Chalo, biological asset. Okay. Or we can say what? We can say investment which has been classified as what? Investment which is non-monetary item, is investment in equity shares. Investment in equity shares is non-monetary item and has been classified as what? FBTPL. Then that revaluation gain or loss has been transferred to what? PL. Therefore exchange difference will be also transferred to PL. The rule is very simple. Correct. You have understood this one. Let me take one question which is important from exam point of view also. Already asked in exam. this question number 12. On 30th Jan 2001, A Limited purchased a machinery for rupees $5,000 from USA supplier on credit basis. A Limited functional currency is rupees. The exchange rate on the date of transaction is rupees 60. What journal entry will pass? The machinery account debit to payable. So machinery account debit to payable. It will be what? 5,000 into 60 transaction rate exchange rate. So it will come 3 lakh. First journal entry done. First journal entry has been done now. So again, this machinery is what? Foreign currency, non-monetary item. And this creditor is what? Foreign currency, monetary item. Correct. Now we'll come to 31st March. They have given the fair value of machinery determined on 31st March 2001 is 5,500. The exchange rate on 31st March 2001 is $1 is equal to 65, and the payment till now has not been done. So can you say foreign currency monetary item will be translated by using closing exchange rate. What is the closing exchange rate? 65. So your liability will increase. So there is an exchange loss or gain? Loss. So what journal entry will do? Exchange loss account debit to payable or creditor. So one more journal entry will do exchange loss account debit to payable, and this exchange loss will be transferred to PL. So how much exchange loss? 5,000 into what? 5. That is how much? 25,000. 25,000. This you have understood. Now let us come to what? Machinery. Can you say on 31st March, first we should think about depreciation. But in this question, what is not given? The rate of depreciation is not given. Useful life is not given. From exam point of view, whenever rate of depreciation and useful life is not given, so what you will do? You need to ignore what? Depreciation. You will not assume what? Useful life. You will not assume what? Rate of depreciation. Don't assume. Correct now. Depreciation, rate of depreciation not given, ignore it. Useful life is not given, ignore it. But can practically first depreciation, then revaluation, first revaluation, then depreciation. First revaluation, then depreciation, first depreciation, then revaluation. First depreciation. So first we need to charge depreciation if the depreciation rate is given. In your exam question, it is quite possible they have given what? Depreciation rate. Understood? Now because the revaluation has been done, so batao, on 31st March, what is the fair value given? 5,500 into what? 65. How much? 65 na? 5,500 into 3 lakh 57,500. You will compare with the carrying amount. Carrying amount should be after what? After depreciation, but depreciation we have ignored. So it will be 3 lakh. The total increase what? 57,500. Out of that there is some revaluation gain and there is some exchange gain. Out of this there are some revaluation gain and there are some exchange gain. So what is the revaluation gain? Can I say revaluation gain will be 500 into 60, because 5,000 become 5,500. So ignoring what? The exchange rate fluctuation. Ignoring exchange rate fluctuation, your revaluation gain will be how much? 30,000. Correct. And can I say exchange gain will be what? 5,500 into what? 5. 5,500 into 5. That is how much? 27,500. Okay, this will be transferred to what? OCI. This will be transferred where? PL. This will be transferred to PL. Understood? Right now we have done the concept, but you have forgotten. Who said PL? Who said PL? Concentration is required. Exam में also this small mistake. Right now we have done the concept. 1 minute नहीं हुआ. Only 1 minute. And then also you forget. देखो, exam hall is the place where you need to perform. You need to perform where? In exam hall or in classroom? Classroom, so I am performing. Are you getting what I am saying? Abhi 1 minute discussion you have done mistake. Same mistake will be repeated where? Exam. So abhi right now we have done that. What we have done? Batao. This point we have done now. If for foreign currency monetary item we have taken example, somebody said PP and that example is continued. After this concept we are doing that question now. But in exam, so which question? First you need to identify which chapter. High chances of mistake there, high chances. ठीक है ना. So when gain or loss has been transferred to OCI, the exchange difference will be also recognized in OCI. OCI, correct? Yes sir. So this will be also transferred to what? OCI. However, can you say because both are transferred to OCI, we can pass one journal entry. But in ICS 30 minutes they have given two journal entry, so we can also pass two journal entry. What will be journal entry bata for this revaluation gain? A machinery account debit to revaluation surplus directly. Machinery account debit to OCI, in bracket write down what? Revaluation surplus. Understood? Don't say directly revaluation surplus. You need to route through what? You need to route through what? OCI. And what will be journal entry for this exchange gain? Same journal entry. Machinery account debit to OCI, in bracket what? Nah, revaluation surplus. Therefore I am asking this journal entry. It will be transferred to the same component of equity. Same component of equity. So this was transferred to which account? So this will be also transferred to what? Revaluation surplus. देखो till now तो I have not used FCTR. Whether I have said FCTR, अब क्यों आ रहा है दिमाग में? In exam also same thing will come, because FCTR is only one reserve which we create under Ind AS 21. This only होता है in exam. Till now I have not used FCTR. Whether I have used any FCTR in this chapter? FCTR will come only in foreign operation. And foreign operation we have not started. But in exam all chapters will be amalgamated, and then what you suppose to do? Internal reconstruction is required after that. So in exam all chapters, not only in paper one, so all subject will be amalgamated. All subject na. Suppose they ask demerger, you will go to DT and you will think about tax effect. Yes or no? Demerger question will come, and demerger you do where? In tax also. Then your tax teacher yaad aayenge. What your tax teacher says about demerger. Every point will be amalgamated. Got this point? Correct. So this small mistake only you need to avoid. This small point. Correct. So this will be also transferred to what? Revaluation surplus. Therefore I say pass one compound journal entry, only one journal entry. Normally my regular class I give only one journal entry. Whenever you think about two journal entry, doubt will come. Doubt will come. But in ICA solution they have given how many journal entry? Two journal entry. Say check karo machinery to this, machinery to this. Then they have given what? Tax rate also. I have not read the entire question. They have given tax rate. Whenever tax rate is given, it means what? Ind AS 12. Ind AS 12 means what? Deferred tax. Deferred tax means what? DTA or DTL. So bata there will be DTA or DTL? DTL. Because can you see here the carrying amount will be more than tax base. And whenever revaluation gain which will be taxable in future, that will be taxable temporary difference. So we need to create DTL. Now the DTL will be created on which gain? Whether we'll create on 30,000 or 27,500, key on both. Question, have you understood? Don't see the solution. Huh? Once you see the solution, interest lost. Because in exam this type of doubt will come. Correct. But the 30% you will apply on 30,000, key on 27,500, key on both. Both na? Both? Huh? Both? Everyone said both? How many are saying both? Give reason. Very good, excellent, excellent. Means you are conceptually strong. So I was just checking why you are saying both. Correct now. If you are giving this reason, carrying amount is more than tax base by that amount, which means you go to Ind AS 12. You are not in this chapter. So whenever I am asking tax effect, you need to go to which chapter? Ind AS 12. Compare carrying amount and tax base. Very good, very good. Understood. I was just cross checking your concept. Correct. So revaluation. The journal entry part, I forgot to ask one question. I read the journal entry. Okay. But the deferred tax will be transferred to what? PL or OCI? Now to पढ़ लिया ना. PL or OCI. As per Ind AS 12 or as per Ind AS 21? As per Ind AS 12. Ind AS 12 says that deferred tax will be accounted as per the accounting treatment of transaction. The transaction has been transferred to PL, deferred tax will be PL. The transaction OCI, deferred tax will be OCI. The transaction other equity, deferred tax will be also in other equity. So same journal entry, revaluation surplus OCI to what? DTL. Understood this much? This much you understood. Then what happened? The payment to overseas supply is done on 31st March 2002. Means next year the payment was done. Next year payment was done. So payment was done when the rate was 67. So once again there will be exchange loss. There will be one exchange loss. What journal entry will do? Keep payable account debit to bank. Payable account debit to bank. Payment has been done at which rate? Payment has been done at which rate? 67. But initially it was recorded at which rate? 60. Means on 31st March, previous 31st March, recorded at 65. So how much increase? 2 rupees. That 2 rupees will become exchange loss. This exchange loss will be again transferred to PL because this is foreign currency. It will be transferred to PL or OCI? PL. Why? Because this is foreign currency monetary item. Foreign currency monetary item. Foreign currency monetary. Kasam ka. Foreign currency monetary item. All exchange difference will be always transferred to foreign currency non-monetary item when they are carried at fair value. When they are carried at cost, then no translation. When they are carried at fair value, their gain or loss depend upon revaluation gain or loss. Their gain or loss will depend upon, the gain or loss will be transferred to PL or OCI. That will depend upon revaluation gain or loss. Understood this point? Chalega. Now, can you say once again it is given, what is given the question? Let us read. The fair value of machinery remain unchanged for the year ended 31st March 2002. Now, I have some doubt as regard of ICAI solution. My solution is different from ICAI, but will follow what? ICAI. Will follow ICAI, but I am not happy with the ICAI solution. Now, can you say on 31st March 2002, what they are saying? If fair value remain unchanged, fair value remain unchanged, so it become 5,500 into what? This is one doubt, and the carrying amount will be equal to what? Previous carrying amount, that is 3,57,500. 3,57,500. I hope you have understood. Correct. Now this 5,500 should be translated by using 67 or 65. This is a doubt. 67 or 65. Means 67 is on 31st March 2002 and this is on 31st March 2001. What do you think? 65 or 67? 65 or 67? I mean, right now we are standing where? 2. But it should be multiplied by 65 or 67? How many are saying 65? How many are saying 67? अरे कुछ तो बोल दे, एग्जाम में करना होगा भाई, साइलेंट रहने से नहीं होगा. You need to do something ना. तो just apply your common sense. Do it. Suppose you have forgotten everything. Everything is blank. Black picture is coming. In exam, you need to control emotions. Write whatever you have understood. Are you getting? So when you are writing, from my point of view, higher chances is that will be correct. Higher chances. Higher chance. Normally, what happens? We don't write, or we doubt about ourselves, or will take more time to write. Are you getting what I am saying? So I am asking some question. It will be 65 or 67. Why I am asking? Because same question will come. That time also the doubt will come. So you recall me कि कुछ हुआ था क्लास में कुछ हुआ था. And therefore I am asking this question. बताओ 65 or 67 fast. How many are saying 65? How many? देखो raise your hand. बोलो 65, 67, 67. So this is as per ICAI and this is as per you all. So it means you are conceptually correct. If you are saying 67, why you are saying 65? Because there was no revaluation. Unnecessary we are creating what? Exchange gain. Means exchange gain will arise only because of revaluation na, and they are saying fair value remain unchanged. So from my point of view, देखो, I may be also wrong. It is my suggestion. Means as per my point of view, it should be 65. But as per ICAI solution, it is 67. We will prefer what? ICAI solution. I can prove also. If you read the Ind AS 21, what they have said. If you read Ind AS 21, carried fair value at exchange rate when the fair value was determined. So, but this fair value 5,500 was determined on which date? On 31st March 2001. So, from my point of view, it is my suggestion. I will follow what? ICAI solution only. देखो, whenever there is a doubt, So we need to apply our interpretation na. So I am applying my interpretation. Chalega? And you have also done that only. Because you are also chartered accountant. You are thinking like what? Chartered accountant. That is only required. But kasam khao, in exam what will take? Now so you will not. क्या है? Class doubt or बाहर का doubt? चलो, so 67 understood. Have you understood this? Correct. So in exam you will take what? 67. Even though your answer is what? 65. ना याद रहेगा? Same question is going to be repeated. Already asked in exam. So once again there will be some revaluation gain. How much it is coming? 5,500 into. It is 3,68,000. Difference is coming how much? 11,000. 11,000. So of course can I say this will be entirely exchange gain? Entirely exchange gain. And there is no revaluation gain. Arpata nahi lag raha hai. This is Arpata, and therefore I am saying I am not okay with the solution. But then also this exchange gain they have transferred to what? OCI revaluation surplus. And journal entry they have done machinery account debit to OCI to revaluation surplus, and once again on this exchange gain we have created what? DTL. DTL journal entry remains same, OCI to DTL. Chalega, same thing. So this I think you need to be careful about this journal entry. Careful about this journal entry. Chalega. Okay sir. Same question is going to be repeated. Okay sir. Yes. So I hope this you have understood. Any simple question so you can do it. In this I think no much discussion required. No much discussion required. Only you need to be careful about what? This point about the translation, about the difference. Now they have given one special point. For that special point till now no question have been asked. For example, inventory is there. Inventory. So can you see it is measured at carrying amount or NRV, whichever is lower? And suppose PP or any intangible asset or any investment property, can you say if there is an impairment loss, so it is valued at what? Carrying amount or recoverable amount, whichever is lower. We can say whichever is lower. Whichever is lower. So what Ind AS 21 says that whenever we find out carrying amount by comparing two or more amount. So in this you can see there are two more amount, value in use and fair value less cost of disposal. So by comparing two or more amount, then how to translate that amount? So what is this carrying amount? This carrying amount means this is not carrying amount. This is cost price. Sorry, this cost price and this carrying amount should be translated by using the exchange rate when such cost or carrying amount was determined. When such cost or carrying amount was determined. And this should be translated by using the rate when such NRV or recoverable amount was determined. When such NRV or recoverable amount was determined. I hope you are understanding. Suppose you purchase this on 1/4/2023 and NRV we are determining on 31st March 2024. So for this you will take which rate? Exchange rate on which date? On 1/4/2023. But for NRV you will take which rate? Exchange rate on 31st March 2024. Understood? Till now this type of question has not been asked. Be careful. Can be asked in exam. Can be asked in exam. Chalega. So what they are saying? If such an asset is a non-monetary, of course they are non-monetary item, and measured in a foreign currency, means they are foreign currency non-monetary item, the carrying amount is determined by comparing the cost or carrying amount. Cost is for inventory, carrying amount is for PP, etc. as appropriate, translated at the exchange rate at the date when that amount was determined, and the NRV is for inventory or recoverable amount is for PP, etc. translated at the exchange rate at the date when that value was determined. Understood? Understood? Simple. Now you have understood. Now can you say any questions come, you can do it or not? If you retain this point, so question is important or concept is important? How much question you will practice? The practice of question is not required. If you remember this, you can do it. Now you have done 10 questions before exam. You have forgotten this. Now can you apply? You can't apply. You can't apply. So for this chapter, think about the content. Think about the content. Done. Now let us come to foreign operation. Now foreign operation, you have understood that foreign operation are foreign subsidiary, foreign associate, foreign joint venture, foreign branches. Correct now. Now one thing we have understood that whenever foreign operation have different functional currency, then they are Indian reporting entity. Then what is required? Translation is required. Means can I say there can be actually how many situations? Suppose this is reporting entity and this is foreign operation. If the functional currency is rupees, then to no translation required. No translation required. If the functional currency is rupees and dollar, then translation is required, and then consolidation is required. I hope you are understanding. Chalega? Bolo. And if this is dollar and euro, then also translation required. Not translation you will do in which currency? Because can I say the presentation currency may be rupees. So translation, this you will translate in dollar or rupees. So first, normally, practically I am saying, first it will be in dollar. Then you will prepare this what? One consolidated financial statement, and that will be in dollar, and this will be translated in what? Presentation currency. Have you understood this point? Not able to understand. So confusion ho gaya? Huh? This example number 1, example number 2, no doubt. So it is quite possible that Indian reporting entity has a functional currency dollar, but their presentation currency may be what? Rupees na. Of course it will be rupees na, Indian company. Are bolna re? So first now euro need to be translated in dollar or rupees. Foreign operation financial statement will translate in dollar rupees. First as per the functional currency of reporting entity. So what is the functional currency? So this will first translate in dollar, then prepare what? Consolidated financial statement, and then translate in what? Rupees. So actually there are two topics. Translation of foreign operation in the functional currency of reporting entity, and translation into presentation currency. Translation into presentation currency. Suppose there is one standalone entity X. There is no subsidiary, there is no joint venture, nothing. It is standalone. But their functional currency is what? Dollar, and their presentation currency rupee. So this is also required translation, na? From dollar to what? Rupees. Understood? There are two topics. Translation of foreign operation in functional currency of reporting entity, and translation into presentation currency. However, the rules are same. Good point is that rules are same. Whether it is translation of foreign operation or translation into presentation currency, rules are same. So thank you very much. But there can be two type of questions. So don't be confused about these two type of questions. Don't be confused with this two type of question. They will say translate in functional currency reporting entity, or they will say translate in presentation currency. Rules are same. So rules, they say very simple rules. They say all asset, all liability. All asset means whether it is monetary or non-monetary. All asset means all asset. All liability means all liability. Translated by using which rate? Closing exchange rate. And of course we are doing translation on reporting date. The closing exchange rate of which date? Of reporting date. All income, all expenses. All income, all expenses by using either transaction exchange rate, but that will not be given. They will give what? Average rate. So translate by using average rate. Correct. Now equity will depend upon the information given the question. Normally it will be the transaction date exchange rate. Transaction date exchange rate. But if it is foreign operation, then we'll translate by using that exchange rate on the date of acquisition. Date of acquisition means business combination date of acquisition. So if you have a foreign subsidiary, then translation will do as per the exchange rate on the date of acquisition. Correct now. So, but for this normally they will provide information in question only. When the equity share capital were issued, when the retained earning was generated. So depend upon that generation will use what? Translation rate. Are you getting what I am saying? Correct. So exchange rate on the date of acquisition if it is foreign operation. If it is not a foreign operation, means if it is a standalone entity, only we are translating what? In presentation currency, then we'll take transaction date exchange rate. transaction rate, exchange rate. Understood? Have you understood? However, for these information will be given in question. If not given, we'll take the earliest rate given. Whatever the earliest rate was given, we'll take that rate if nothing has been given. However, they will inform you. So for this equity, normally information will be given in the question. For equity, what will be given? Information will be given the question. Based on that information, translate. Based on that information, translate. Chalega? Now what is your doubt? You are asking about equity or assets and liability? Equity, I said not transaction reduction rate, or if it is a foreign operation, that take the date of acquisition. Date of acquisition, whatever date of acquisition is given, when the control was obtained. When the control was obtained. Chalega. However, I said information will be given in the question. Information will be given in the question. Now, any difference due to this translation will be transferred to what? Any difference due to this translation will be transferred to FCTR through what? OCI. It will be accumulated in a separate component of equity, that is FCTR, through OCI. So any difference will be transferred to FCTR, means foreign currency translation reserve, which will be shown as a part of OCI. This FCTR will be reclassified to PL. So it will be reclassified to PL, and therefore reclassified to PL on derecognition of foreign operation, means when the foreign operation are disposed of. Disposed of means in case of subsidiary, in case of loss of control, in case of associate, when the significant influence is lost. So when the foreign operation is disposed of, understood is fine. Then FCTR will be reclassified to PL on disposal of FO. Understood. And can I say this is nothing but gain of foreign subsidiary. So if any gain of foreign subsidiary will be attributable to both parent company and NCI. So it will be distributed between owner of parent company and NCI in consolidated financial statement. Have you understood this? A very good question has been given in ICAI study material, but till now not asked. This question I like personally, because if these same questions come in exam, most of the students will do mistake in exam hall. I mean, right now I don't know whether you will do correct or wrong, but if you are not concentrating, you will do wrong only. But higher chance that in class you will do correct, because I mean, right now we have done the concept now, but in exam hall same question is dangerous question. Let's see. PQR Holding Limited is based in London and has a pound sterling GBP as its functional and presentation currency. On 1st April 2001, PQR Holding incorporated PQR India Limited as wholly owned subsidiary in India. Okay. PQR India will be engaged in the trading of item purchased from PQR Holding. The shares of PQR India have a face value of rupees 10 each, amounting to rupees 500 crore, were issued to PQR Holding in GBP on 1st April 2001. So 1st April 2001 become the date of what? Date of acquisition, the date of issue of equity shares. The shares of PQR India amounting to total of 500 were issued. So both are same only, I will say. Chalega? PQR India has adopted Ind AS with effect from its incorporation. In accordance with Ind AS, management of PQR India has concluded that functional currency is Indian rupee, falling in the summarized trial balance of PQR India as on 31st March 2002. So this becomes the first trial balance of that company, because the first year only being the reporting date of PQR India and PQR Holding. All amounts given below are in rupees, in crore. Share capital, securities premium, retained earning, additional information. Retained earning, always normally I have seen one mistake students do, that they don't read the balance sheet or they don't read the trial balance, because they will think that all the items are known only, and we go to additional information. Normally I am saying, and there can be a situation when they have given the hidden information where? In the balance sheet or trial balance. Are you getting what I am? They have given some hidden information. Suppose you have not read it carefully, you have just gone through additional information, started your working note, and at the end you realize that you have missed some point after doing an entire question. So always read very fast, but read it. Deferred tax liability, income tax payable, import duty payable, employee benefit payable, sunny debt payable, PP, net of depreciation, computer software, net of amortization, inventory purchase on 15 March 2002. One point has been given now. Correct. There is no other indicator of impairment, cash and bank balance, sunny debt receivable, allowance for doubtful trade receivable. Additional information they give PP on 38 purchase, acquisition date is what? Computer software, acquisition date is what? 5th May. PQR India has adopted the following accounting policy in relation to the shareholders fund to translate the equity. You can see for share capital and other equity, they have given the translation rule. Even though not given, they will apply this only. But I say that normally they will provide information about equity. Normally they will provide information about equity. So to be translated by using historical exchange rate means when it was issued. Securities premium to be translated by using historical exchange rate. Retained earning to be translated by using average exchange rate. So we will use this information only for equity. Then since the presentation currency of PQR Limited GBP, PQR India is also required to translate its trial balance from INR to GBP. Following rate provide relevant foreign exchange rate. You can see they have given closing spot rate on 1st April 2001, closing spot rate on 30th April 2001, closing spot rate on 5th May, closing spot rate on 15th March, closing spot rate on 31st March, average exchange rate. I hope you understand why they have given closing spot rate. You are closing, opening or average? Closing rate of that particular day. Understood? Now they have asked two questions. First, explain the principle of monetary and non-monetary. And there too you can see monetary and non-monetary principle. First I have definition and then there are rules. Rules you know, translation rules. Based on the principle, bifurcate the line item of the trial balance into monetary and non-monetary. First you bifurcate. Batao. Share capital, securities premium, retained earning, long-term borrowing, deferred tax liability. Whether deferred tax liability is payable, it is never payable. Correct now. Therefore it become what? Think and say. Already definition done. Income tax payable, import duty payable, employee benefit payable, sundry debt payable, PP, computer software, inventory, non-monetary, cash and bank balance, sundry debt, allowance. देखो ICAI know where you can do mistake. ICAI know where you can do mistake, and therefore they are asking this type of question. And I was also knowing that last point you will do mistake only, and you have done mistake. Means to only explain this, I started from what? Beginning. देखो क्या होता है? Normally what happen? Normally student what they think. What is the nature of student? When I was student, I was also like you only. So I was also like you only. So I was not different. Same like you. What we do when we do question and we have done some mistake now. Suppose we have done mistake. We don't give importance to that. And you think, अच्छा, okay, ठीक है, आगे चलो. Understand what I am saying? We don't give importance that whatever mistake we are doing, and we'll understand. I will write on monetary item. Okay, chalo monetary item. Okay, chalo monetary item. And you will not give importance to that. Means either you will not think why, or you will not write this point anywhere. So what is the use of doing this? And normally this only happen. Ki whatever mistake you are doing, you are not giving importance to that mistake. And same question will come in exam, and same mistake you will do. So whenever any mistake is coming, now because now you will start revision for every subject. So these mistakes are very important. Whatever mistakes you are doing, write down in a special notebook. One एक छोटा notebook बना लो. Small notebook for every subject in one notebook. You are starting with FR. Write down Ind AS 21. Question number, what is the question number? 19. Allowance for bad and doubtful debt. It will be a monetary item. Write down. Understood? Correct. Before exam, just before exam, 1 hour before, you have nothing to do. You think what to do, and you waste your time by reading unnecessary, unwanted things. You will ask your favorite friend which chapter is important. You think he or she is Paramatma. He knows what question paper is coming in. Am I right or not? And they will, or your favorite friend will call you. Do this question is going to come. This Falana teacher has said. The Falana teacher is God. Am I right or not? This only you do. You waste your time. 1 hour, 2 hours, you don't know what to study. If provided your entire revision has been done, that time this is must. Or I will say just before exam, whatever you are doing, you will not understand anything. A new thing so can't be done. Now if you are thinking that just before exam, you will be able to do new thing. चलो कर लेते हैं आरटीपी. जस्ट बिफोर एग्जाम आरटीपी देख के जाओगे, कुछ नहीं समझ में आएगा. आरटीपी a new question will come or you will be worried if this question will come, or panic will start. So a new question is given in RTP and just 1 hour before you are going to do that, you will panic. I'm not saying don't do that, but this is more important. Identifying this you do every subject, and once you avoid this in exam, so your 50 marks will become 80 marks. 50 marks will become what? 80 marks, provided you have covered 100 marks question paper. That is also one important thing. Your 50 इतना difference आता है marks में, because normally we do these mistakes only. Got this point? So start writing all the mistakes in some small notebook, which you can carry. You can carry anywhere. Means I will say you can carry anywhere, means whenever you are eating lunch, that time you are not doing anything. You are doing anything? Eating now. So eating, and you can visualize something. Open that. Start reading that. All times counts. Every minute is important for you. Every minute is important for you. So this is important, which I used to also do. I will suggest that you also do. Identify what? Mistake, write down and then revise it. ठीक है ना? So this allowance for doubtful debt will be a mistake in exam 100%. The rule is what? Just write this was receivable and this is not receivable. If you are translating this amount at closing action rate, so this will be also translated by using which rate? Closing action rate. So any allowance for any asset, you will need to translate by using the same rate as you have translated that asset and liability. This is the rule. Rule, have you understood? So this will be a monetary item only. You can't say it is a non-monetary item. Understood? Correct. This you have understood. Now let us do translation. You will give me the rate. Batao, which rate? You have the following rates. Give me the rate. Share capital. Rate batao. Rate give me rate. First April date is given 0.0123. Then securities premium 123. Then retain earning 0.1116. This is the average rate. Then long term borrowing 'बोलो long term borrowing'. हाँ तो बोलो रेट बताओ. You don't have the question. ओहो बड़ा मुश्किल है यार. रेट बताओ. 0.0109. 0.0109 ना. 0109. Then deferred tax liability, बोलो, same ना, same. Income tax payable, import duty payable, employee benefit payable, sanitary debt payable, PP. 0.0120, 0.0120 ना, चेक कर लो. कंप्यूटर सॉफ्टवेयर 0.0119. इन्वेंट्री 15 मार्च 0.0108. कैश एंड बैंक बैलेंस 0.109. ट्रेड रिसीवेबल 0.0109. This is 0.0109. Done. बोलो ना, simple. Simple. I said everyone will do mistake and everyone have done mistake. I said na, this question I was thinking that in class so you will do correct, but in class also you have done mistake. So what will happen in exam hall? One simple question we make it complicate. This is super simple question. Question cannot be easier than this. But out of 10 marks you will score 0 marks. Because first thing to either you are not concentrating or you don't give importance to anything or you don't want, चलो ठीक है बाद में करेंगे. What is the mistake have you identified? I don't understand why you have said this. I have not asked this rate, but why you have said this rate? Why you have said this rate? What was the reason? What was the reason? अभी बोला, अभी इतना जो all asset, I said 5 times all asset, including monetary, non-monetary, monetary. I have given stress also on that. ऐसा नहीं, I have not given stress. I have said ना, all item, asset, liability, monetary, non-monetary, closing exchange rate. Where it was given purchase date कहाँ लिखा हुआ? Understood what I am saying? So these all mistakes actually make CA exam complicated. CA question paper is not complicated. Either we do not concentrate or we forget any point because of lack of revision. Or I am saying revision तो अभी किया तुरंत, but not acceptable. And same mistake you will do. So write down somewhere whenever you are doing this type of blunder mistake, keep for exchange rate, for PP etc. for foreign operation, use what? Closing exchange rate. And then this answer will be very easy. Any difference will be transferred to what? FCTR. Any difference will be transferred to FCTR recognized in OCI balancing figure. Correct? Understood? देखो one thing फिर से मैं बताता हूँ. Just try to understand this fact. Revision class is important when you are no study तो बाद में आता है. When you are listening it properly, listen whatever I am saying. First listen, because I am here. I said in my first class that I know where you do mistake. It is not possible to do all the questions. But before coming now, last night I was working for. I have prepared this all point for 2 hours. Means I am not coming without homework. What do you think? I come without homework. Last day because of busy schedule from 12 to 2 I was only thinking what to say, what not to say. I sleep after 2 p.m. only because of you. Because I am preparing now what to teach, what not to teach. Every day I am uploading the today's class. The PDF I am uploading previous day only. Because I am preparing which question to take, which question not to take. What is my benefit? No benefit. I can teach anything now. अरे बोलना रे. Just I am doing my homework. You should do something. Otherwise, it's totally waste. Revision class is totally waste. I will say better study what? In your home only now. Why you are coming if you are not concentrating? Concentrate karo. Concentrate. And when this type of mistake happening, it means you are not concentrating. It means you are not concentrating. Chalega. Next time again I will ask one question. I want that listen with full concentration. Say correct answer. Okay. Chalo. But have you understood now? Now this mistake will not be repeated. This mistake will not be repeated. Chalo. So the rules is very simple. I will say once again. Assets and liability by using which rate? Closing action rate. On which date? On reporting date. On reporting date. Chalega. All income and expense either transaction date action rate or normally it will be average rate from exam point of view. Equity will take transaction date action rate. However, the information will be given the question. Any difference will be transferred to what? FCTR. Now, a special point for consolidation. Just try to understand, everyone. Suppose there is one parent company whose functional currency is INR and there is a subsidiary whose functional currency become dollar. So this become foreign operation. Now they may ask a question of what? Consolidation. But this type of question they have not given in ICAI study matter for consolidation. Do we expect they will not ask a question of consolidation? Because they have not given any question of consolidation with what? Foreign subsidiary. But if they ask, please apply the same concept only. Whatever we have done in what? In consolidation chapter. Only there are 4 special points which you need to understand. What I am saying, just try to. Suppose they ask this question. So you have not done any question of this nature. But you have done consolidation now. You know fair value adjustment. Then you know what? Analysis of profit. Then you know statement of net asset. Then goodwill calculation. Then what? The other equity. Then preparation of balance sheet. Only can I say, first you need to translate. That you can do now. Translation you can do. Abhi translation we have done now. Now for this consolidation there are how many special points? 4 special points. If you remember that 4 special points, any question you can attempt. Don't think an exam whenever new questions come now. Don't think about how much correct you have done. How much correct, how much wrong you have done, that you don't think. A new question attempt it and leave it to the examiner. Let them decide how much marks they will give. But can you see you can attempt or not? You can attempt. So it is quite possible. Suppose they ask this question. Same process, only how many special points? After translation we have done. Translation you can do. Then after translation how many special points? 4 special points. That we are understanding. From exam point of view, they may ask a separate question of these 4 special points for 5 marks. For 5 marks. Chalega. Separate question. That is important. Correct. Yes, sir. So first is what? Intra-group transaction. Can you say intra-group transaction means we are discussing about sale transaction, purchase transaction. So what they want to say? Suppose ki parent company, subsidiary company. This functional currency is rupees and this is dollar. And they have done one sale transaction in $10,000. But this is a functional currency transaction for parent company or subsidiary company? It is a foreign currency transaction for parent or subsidiary? Parent. So this become a foreign currency transaction for, and this become a functional currency transaction for. It means we need to translate in which company. Parent company will pass my journal entry, receivable, account debit to what? Sales at $10,000. Let us assume 80. So this will become 8 lakh, and here will pass journal entry, inventory, account debit to payable. How much? $10,000. $10,000. Understood this point? Have you understood this point? Correct. Suppose this transaction was done on 1/1/2023. Now on 31st March 2023, you will translate this foreign currency monetary item, and let us assume now the rate become 82. Now the rate become 82. So what journal entry will do? Receivable account debit 20,000. 20,000 now. To what? Exchange gain 20,000, and this exchange gain will be transferred to what? PL, and here no journal entry. Correct. But can you see, because this financial statement is in dollar, so we will translate this all item from dollar to what? Indian rupees for consolidation purpose. Therefore inventory will be translated and payable will be also translated by using which rate? Closing exchange rate. So this will become 10,000 into 82. This will become 8 lakh 20,000. This will become 10,000 into what? 82. This will be also 8 lakh 20,000. You can see now receivable in this book become how much? 8 lakh 20,000. Can you see in CFS this will be kata kata? Kata kata. And in CFS what will come? In CBS inventory will come how much? And retained earning may gain will come how much? 20,000. Understood? Now the doubt is what? Why we are doing this? What is the doubt? Can you see you have eliminated the foreign currency monetary item, intra-group foreign currency monetary item in consolidated financial statement. Now the question is that exchange gain which is due to that foreign currency monetary item, whether that require elimination in CBS, whether you will eliminate this, whether you understand the question? Means this much, so you know, means even though if I will not discuss this much, so everyone will do. Correct? And automatically the debtor and creditor will be cancelled. But will you eliminate this exchange gain in consolidated financial statement because you eliminated the transaction which give rise to such exchange gain? So Ind AS 21 says no. Exchange gain will not be eliminated in consolidated financial statement. Can I say even though transaction is eliminated, but also this transaction will be settled practically? Means subsidiary company will pay to whom? Parent company. This is eliminated in which books? But actually payment will be done or not? It means parent company is exposed to gain or loss or not. So parent company is exposed to such gain or loss, and therefore it will not be eliminated where? In CFS. This is the point. First point, have you understood? Special point. First point you understood. Second point. Second point, what they are saying? There are some, means we have, if we have done, remember Ind AS 28. Ind AS 28 may we have done long-term receivable, long-term payable for which settlement is not planned. Remember, for which settlement is not planned, of which is not likely to occur in foreseeable future. Remember that point? Chalo, bhul gaye. Now suppose you have an investment in subsidiary company of rupees what? 20 lakh, and you have some long-term receivable of 10 lakh, and you have a long-term payable of rupees 5 lakh. So for this long-term receivable and payable, the settlement is not planned. Settlement is not planned. So actually this is known as net investment in foreign operations. This is known as net investment in foreign operations. This is receivable from whom? From subsidiary company only. This is payable to whom? Subsidiary company only. So this becomes net investment in foreign operations. Net investment in foreign operations. Understood? Remember this point? There's a pin drop silence in the class. In the Ind AS 28 one point we have done, there are some long-term receivable, long-term payable for which settlement is not planned or not likely to occur in foreseeable future. So that will be a part of net investment in associate or joint venture. That we are discussing. that we are discussing. Suppose this is what? As separate financial statement. We have investment in what? Subsidiary company. Suppose $10,000. It is a foreign currency monetary item. It is a foreign currency non-monetary item. Foreign currency non-monetary item. And we have a long-term receivable for which settlement is not planned. And suppose this is also $10,000. So this becomes foreign currency monetary item. And there is some long-term payable to subsidiary companies. Let us assume $2,000. So this becomes foreign currency monetary item. Now whenever there is a foreign currency non-monetary item, we do not translate because it is carried at cost only. But whenever there is a foreign currency monetary item, this will be translated by using closing exchange rate, and there will be some exchange gain or loss on this. Now what Ind AS 21 says that these are the monetary items for which settlement is not planned, not likely to occur in foreseeable future. So can you say parent company is not exposed to any gain or loss? If they are not exposed to gain or loss, this exchange gain will be eliminated and this will be transferred from PL to OCI and accumulated in FCTR So any exchange gain or exchange loss of foreign currency monetary item for which settlement is neither planned nor likely to occur in foreseeable future will be transferred from PL to OCI and accumulated where? FCTR. This only need to retain. Chalega. This is not yet asked in exam, but a small question has been given ICS 30 minutes can be asked in exam. Now with MCQs to become important. So what they want to say? Correct. If you read, exchange difference arising on monetary item that form part of net investment FO will be recognized in PL in their separate or individual financial statement reporting entity. In CFS, such exchange difference is taken to OCI and accumulated in separate component of equity, that is FCTR, and will be reclassified to PL only on disposal of FO. So simple. There are two, means in exam they may give two type of, now whenever there is a monetary item, so there are two type of monetary item for which settlement is planned. Are you reading? And for which settlement is not planned. We are discussing about foreign currency monetary item, huh? Correct. So if settlement is planned, exchange gain or loss will not be eliminated in CFS. But if it is not planned, exchange gain or loss will be eliminated and transferred from what? PL to OCI and accumulated where? Accumulated in FCTR. Now have you understood? If question is silent, always assume this. If question is silent, then assume that settlement is planned. Chalega. Got this point? Have you understood this point? Simple. Yes, sir. Okay, sir. Now, next point is what? Calculation of goodwill. Now, the question is that, suppose parent company has rupees and subsidiary company is dollar. So, we will calculate goodwill in rupees or dollar. Means first we should calculate in rupees or dollar. So, what Ind AS 21 says that we should calculate in the functional currency of what? Subsidiary company, means in dollar. So, calculate goodwill or gain on bargain purchase in dollar and then translate in what? Functional currency of parent company. It means, can I say now, working note number 1, when you are doing fair value adjustment, that you will do in what? Dollar. This will change. Okay. Then working note number 2, when you are doing AOP will be in dollar. Yes or no? Then working note number 3, Sona will be in dollar, correct? And then working note number 4, goodwill or gain on bargain purchase will be also in dollar. Will be also in dollar. So can you see, to calculate this should be also in dollar now. So all working note will be in dollar, and then translation is required. Then translation is required. So this fair value adjustment is nothing but assets and liability of which company? Subsidiary company. So first do adjustment dollar and then translate the foreign operation as per the closing exchange rate. I hope you are understanding. Are you able to understand? Correct. So all working note will be done in dollar and calculate goodwill in dollar and then translate by using closing exchange rate. That will become goodwill on the date of consolidation, which will come in the balance sheet. Which will come in balance sheet. Understood? Correct. So can you see this all working note, you know? Only this point you should know. Only this point was a point of what? Retention, which you should retain in exam also. Suppose they ask you the consolidation of foreign subsidiary, so all working note you do in dollar. Understood? And after this working note, prepare the financial statement of foreign operation in dollar. Any difference will be transferred to FCTR, and then start preparing what? Consolidated balance sheet. Consolidated balance sheet. But that type of question they will not ask. But this question they may ask, calculate goodwill. This much they may ask. Let me take one question which is already asked in exam. I have taken or not this question. Global Limited, an Indian company, acquired on 30th September 70% of share capital of Mark Limited. An entity registered as a company in Germany. The functional currency of Global Limited is rupees and its financial year is 31st March 2002. The fair value of net asset is 23 million euro and the purchase consideration is 17.5 million euro on 30th September. The exchange rate was 82 per euro on 30th September and on 31st March it was 84 per euro. What is the value of goodwill? So first we will calculate goodwill in what? Euro. So what you will do? Batao. What is the fair value of consideration paid? 17.5. Then you need to find out NCI by using which method? Pasina method, na? So can you give me NCI 23 million into what? 30%. How much? 6.9. Total become 24.2. Then minus what? 24.4. Then minus 23 is equal to how much? 1.4 into what? Into will do 82 or 84? 84. This become goodwill on the date of consolidation. This is goodwill coming. How much coming? New answer? 149 point. Sorry. 117.6. Correct. There is one more question. Mark Limited sold good costing rupees 2.4 million euro to the Global Limited for rupees 4.2 million euro during the year ended 31st March 2002. The exchange rate on the date of purchase by Global Limited was 83 and on 31st March 2002 was 84. The entire goods purchased from Mark Limited are unsold as on 31st March 2002. Determine the unrealized profit. So Mark Limited is parent or subsidiary? Correct. So it is downstream, upstream. It is an upstream transaction. So I am just explaining the entire thing. Suppose this type of question asked and they have asked journal entry also. So in the parent company, in the subsidiary company. So in the parent company, it is a purchase or sale? Purchase. So what journal entry will do? Inventory account debit to payable. What is the amount? It is 4.2 into 83. Correct now? So 4.2 into 83. 348.6. 348.6. Here what was journal entry do? Receivable account debit to sales. How much euro? 4.2. Okay, they will pass one more journal entry. Cost of sales account debit to inventory. So what was the cost price of inventory sold? That is 2.4. 2.4. Understood? Correct? And of course, there will be how much profit? Profit is equal to how much? 4.2 minus 2.4 is equal to what? 1.8. Correct. Now, this become a foreign currency monetary item. This require translation on reporting date. So payable become how much? Batao? It become how much? 83 to 84. So 1 rupees difference there. So 1 rupees your payable will increase. So there is an exchange loss. Loss na? Exchange loss account debit to payable. How much? It is 4.2. 4.2. Correct. Understood? This much. Now, they have not asked this journal entry, they have asked only what is the unrealized profit. So, this inventory include profit of which company? Subsidiary company. So, that is 1.8 multiplied by what? But multiplied by what? We'll do 83 ki 84. Understood what I am saying? This include profit of which company? And profit is 1.8. So, profit will be 1.8 into 83 ki 84. 83 ki 84. So this transaction was done on which date? So that time profit was 1.8 and that will be 83 only. So this become the profit and you can the difference will come that only. Correct. Now so into 83 will do this become unrealized profit and that require elimination. So 1.8 into 83 is the unrealized profit and that require elimination and that is coming 149.40 na. Same is coming. So that become unrealized profit. So they have asked that much only, they have not asked journal entry. Okay, got this point? Yes, sir. So this type of question can be asked in exam. Then coming to disposal of FO. Disposal of FO. Now, when I am saying disposal of FO, so there are 2 points. One is it is subsidiary. Then what will do? And if it is associate or joint venture, then what will do? If it is subsidiary, then can you see that disposal may result in loss of control or it may not result, means there is no loss of control. Quite possible. Are you able to understand what I am saying? Correct. Now, associate or joint venture, if there is a disposal of FO, so it may result in discontinuation of equity method. Means there is a loss of a significant influence or joint control. We can say in this way, or there is no discontinuation of equity method. Understood this point what I am saying? This can be 4 possible situations. 4 possible situations. When I am saying loss of control, then simple FCTR will be reclassified. To what? Reclassified to PL. Will be reclassified to PL. But whenever it is no loss of control, means this is changes in proportion of what? NCI. Correct. It means then proportionate FCTR will be attributed to what? Will be attributed to NCI. Means it will be added to what? It will be attributed to NCI. The proportionate FCTR will be attributed to what? NCI. Got this point? Correct. Now, whenever this is discontinuation of equity method, in this case, FCTR will be reclassified to PL. And whenever there is no discontinuation of equity method, so in this case proportionate FCTR will be reclassified to PL. Will be reclassified to PL. Proportionate FCTR. This is the entire point. Have you understood this point? So this type of question can be asked in MCQs. However, out of this is more important from exam point of view. Or you can say this is also important from exam point of view. Already we have done some question of this nature in what? When we were doing in consolidation of business combination. Both questions I have taken in revision class also. Got this? This also done. Correct? Then there is one guidance, there is one Appendix B to Ind AS 21. Appendix B to Ind AS 21. So for this Appendix B, I will explain this with one question only. And from my point, that question is very important till now not asked, can be asked in exam. Question 14. What they are saying? Supplier A Limited enter into a contract with the customer B Limited on 1st Jan 2018 to deliver goods in exchange for total consideration of $50 million and receive an upfront payment of $20 million on this date. So they have received what? Some advance payment. So what journal entry will do on 1st Jan 2018? On 1st Jan 2018, our journal entry will bank account debit to what? Advance from customer. And what is the amount we have received? We have received what? $20 million. And at that point of time, what was the exchange rate? 72 per US dollar. So it is 20 into 72. How much? 1440. This becomes the journal entry. Correct. Next point. What they are saying? The functional currency is INR. The goods are delivered and revenue is recognized on 31st March. And $30 million is received on 1st April 2018 in full and final settlement. So it is receivable right now. Now the question is that here on 31st March 2018, is the receivable will be how much? Will be how much? 30 million. Advance will be how much? 20 million. And to revenue will be how much? 50 million. The doubt is what? Means that appendix is for this particular point. As per which rate? As per which rate? Batao. So what they want to say, this advance is a foreign currency non-monetary item. For this no translation required. And that is already received. So for that no translation required. So this will be as per what? 72 only. Means 1440. But this receivable is what? Receivable. So this will be as per the transaction rate exchange rate. On 31st March. So on 31st March, the rate become what? 75. So we will do into what? 75. So 30 into 75 how much? It become 2250. So your revenue will be 2250 plus 1440 means how much? 3690. This become your revenue. This become your revenue. And this become foreign currency monetary item. So whenever it is settled, then also exchange gain or loss may arise. That will be also transferred to what? PL. So this is the entire thing. The advance is the non-monetary item. For that, further translation is not required. Understood? Correct. This is based on what? Appendix B to Ind AS 21. Chalega. Done. Entire chapter is over. Chapter done. Done. Now we'll come to which chapter? Ind AS 7. Cash flow statement. Cash flow statement is simple for discussion. So let me first discuss the entire point. Then I will take one question for practice. Only one question for practice. Chalega. Now cash flow. Cash flow means what? It is inflow and outflow of cash and cash equivalent from how many activities? Operating, investing and financing activities. Operating activities means what? Principal revenue producing activities. Principal revenue producing activities. Investing activities means what? Acquisition and disposal of long term assets or investment which are not classified as cash equivalent. So any investment which are cash equivalent, that is cannot be investing activities. So investment other than cash and cash equivalent. And financing activity means activity that changes the composition of equity and borrowing of the entity. So if any activities which changes, which either increase or decrease equity or what? Borrowing, that will become financing activities. Now there are some activities which is neither financing nor investing. It may not be the principal revenue producing activities. For example, a simple example I'll give: sale of newspaper. So you purchase newspaper, then at the end of the month you sell the entire newspaper. So whatever amount collected, that will be which activity? So what they are saying, if it is neither financing nor investing, it will be considered as what? Operating activities. So any other activities that are not investing or financing activities will be also what? Operating activities. What do you mean by cash and cash equivalent? Cash means what? Cash means cash in hand or demand deposit with bank. Demand deposit means current account. Current account in bank. So these both are what? Cash. Correct. So cash include cash in hand including foreign currency as well as demand deposit with bank. Now one doubt will come, sir, this current account may have debit balance as well as credit balance. When it is credit balance, it become bank overdraft. It become bank overdraft. So whether this bank overdraft will be a part of cash and cash equivalent. Understood this point? Whether this bank overdraft will be a part of cash, means whether it will be deducted from cash and cash equivalent. Doubt, have you understood? Once again, this current account may have debit as well as this, debit credit balance, overdraft balance. So if the current account has credit balance, whether it will be considered as a part of cash and cash equivalent, or it will be a current liability. In balance sheet? In balance, very good. In balance sheet, it will be what? Current liability. But for this chapter, it will be deducted from cash and cash equivalent. So in cash flow statement, it will be considered as a part of cash and cash equivalent. But as per Ind AS 1, it will meet the definition of current liability. So in balance, it will be shown where? In current liability. Understood? Means one clarification has been given. Bank overdraft which are repayable on demand are part of cash and cash equivalent. Means if the overdraft is payable on demand, balance sheet में कहाँ पर? Current liability. But in cash flow statement, it is a part of cash and cash equivalent. But there are some bank overdraft which are not repayable on demand. Any bank overdraft, suppose you have taken any bank overdraft facility, so that is not a current account, that is not payable on demand. So in balance sheet, if it is not payable on demand, it will be current liability only. But in cash flow statement, it will be a financing activity. Then such bank overdraft will be a financing activity. If question is silent, always will assume in this chapter, what will assume? It is a part of cash and cash equivalent by giving a note. Suppose they have given bank overdraft in the balance sheet. Nothing has been mentioned. We'll assume it is a current account, credit balance. It will be shown as a part of cash and cash equivalent. Okay, sir. Chalega? Yes, sir. Then what do you mean by cash equivalent? Cash equivalent is short term, highly liquid investment, short term, highly liquid investment that are readily convertible into known amount of cash, which can be converted into known amount of cash, and which are subject to insignificant risk. Means it is subject to very less risk, insignificant risk of changes in value. So if these all conditions satisfied, then any investment will become what? Cash equivalent. Any investment will become cash equivalent. So can you once again repeat? Batao, what is the meaning of cash equivalent? It is a short term. Short term is what? 3 months or less than 3 months from the date of acquisition. 3 months or less than 3 months from the date of acquisition. So it must be short term, highly liquid investment which can be easily converted to known amount of cash and which are subject to insignificant risk of changes in value. If all these conditions satisfied, then investment will become cash equivalent. Best example is any FD whose maturity period is 3 months or less than 3 months. Any FD whose maturity period is 3 months or less than 3 months, that will be a cash and cash equivalent. One more example I can say, any preference shares which has been purchased with some redemption date and it is redeemable within 3 months from the date of acquisition. So any investment in preference shares which are redeemable within 3 months from the date of acquisition, can you say all conditions will be satisfied? Short term, highly liquid because redemption highly liquid na, correct. They are convertible into known amount because that amount of redemption that will be fixed, amount of reduction will be fixed, and which are subject to insignificant risk because that are not traded in the market, correct. Now that it become what? Cash equivalent. But any equity shares will not be considered as cash and cash equivalent. Chalega? Yes sir. Now cash flow statement, we all know that cash flow statement has been divided in 3 activities, correct. Now for investing and financing activities, they always use which method? Direct method. Direct method means what? Inflow minus outflow, cash inflow minus cash outflow. But for operating activities, they have given 2 methods, either use direct method or indirect method, either use direct method or indirect method. However, as per SEBI requirement, for listed company always use what? For as per SEBI, not as per Ind AS 7. Ind AS 7 has given 2 options, either direct or indirect. Same AS3 also give 2 options, direct or indirect. But for SEBI is applicable only to what? Listed company only will use what? Indirect method. Chalega? Yes sir. Now can you say format is very simple, format में कुछ नहीं बताना. It is cash flow from operating activities, cash flow from investing activity, cash flow from financing activity. Then the total of this will be considered as net increase or decrease in cash and cash equivalent. Then we'll add opening cash and cash equivalent. This will become closing cash and cash equivalent. बचपन में बहुत किया. Can you say inflow outflow direct method? Nothing to discuss much. Only if I need to explain what? Indirect method. For revision is required for indirect method. So can you say the indirect method always will start from what? Profit before tax. Profit before tax from SOPL. Profit before tax from SOPL. Then 2 adjustments are required. Adjustment for non-cash item and non-operating item. Non-cash item and non-operating item. Can you give me some example of non-cash item? Depreciation, amortization, provision, reversal of provision. Therefore, so we started with PBT. When you started with PBT, so that is not relevant. Okay, na? Then I will say not only deferred tax. If you starting from PAT, then add entire tax expense. Add entire tax expense. Chalega? Any more item? Non-operating item. Can you give me some example? Interest income, gain or loss on sale of PP, etc. Interest expense, dividend income, whatever are related to investing, financing, all will be adjusted. All will be adjusted. Correct? Yes, sir. So can you say after this adjustment we get operating profit before working capital changes. Before working capital changes. Before working capital changes. Then we'll do adjustment for assets and liability. Plus minus. So batao. Asset increase, what will do? Plus ki minus. Increase in asset, what will do? Minus. Decrease in asset. Plus. Increase in liability. Plus. Decrease in liability. In this too you are champion. Nothing to explain. But when I am saying asset, this asset is current asset or non-current asset? It is current asset or non-current asset? All current asset is selected current asset. All current asset is selected current asset. Selected. So what is that selected? So what it will not come? Prepaid expense will not come. So I will give some example. I know you know, but when we are asking the confusion, this all confusion will come in exam hall. This all confusion is a part of exam hall. Normally what happens when doubt comes? So can I say at that point of time you may take some wrong figure? Yes or no? I'll give you some example. You'll say me whether it will be adjusted or not adjusted. Inventory. Inventory, debtor, creditor, loan receivable. बताता हूँ भाई, बताओ. Cash and cash equivalent. Fixed deposit. Fixed deposit. FD. अच्छा, FD which are cash and cash equivalent. FD which are not cash and cash equivalent. Are you getting what I am saying? क्या किए CA इंटर में? CA इंटर में, you know CA इंटर and CA final, what is the difference? From my point, CA inter is more tougher than CA final. From my point of view. Means if you ask me, because I teach CA inter student also, CA final student also. From my point of view. Student point of view, once you pass CA inter, then it become easy, na? Correct. But CA inter is one of the toughest exams. But CA inter mein what happened? CA inter mein conceptual knowledge is not required. Only working knowledge required. And therefore you have done a lot of practice without understanding concept being passed. That was the only benchmark for CA inter. Without concept, believe me, we are not knowing accounting standard. Even though you have done it, but I know what was the knowledge. But then also you have answered all the accounting standard questions because that was based on working knowledge only. So CA inter you pass without thorough concept because you have done a lot of practice. Now what happened? Once you pass CA inter, if you carry forward that thing in CA final, means you think that a lot of practice you will pass, that mistake actually we do. And because that is a multiple attempt come. Are you getting what I am saying? Because CA inter you pass with practice only, doing all the questions 100 times, 99 times, correct now, and you pass in exam. And you think that by the same way you will do and you will pass where? CA final. But no, game is different. Game is different. In this CA final, conceptual knowledge is required with what? Practice. With practice. And normally you enter into article sheet and you become auditor. Once you become auditor, you don't practice, as you do audit. So this is also lacking. This is also lacking. And because of that reason, CA final multiple attempt come. However, if you understood this thing, CA final is easier than CA inter. Because this you were not knowing in CA inter also, but in CA inter that type of question they don't ask only. But in CA final they will ask this type of questions. Are you getting what I am saying? But the interest receivable, adjusted, not adjusted. Now I think you have got the hint also. Because you are CA final, you know everything. But application is required, na? If you carry forward your CA inter knowledge, you will die. And normally we carry forward CA inter knowledge. We think that CA inter pass hua na, mehnat kiya tha. And we carry forward that only. Because of that reason we don't think much. Interest is, bata adjusted, not adjusted. Batao na, apply your common sense. Adjusted. Interest payable. Interest payable. Any type of investment, short-term investment, current investment. Understood? Means, can I say any item which is related to investing and financing activities will not be considered. Will not be considered. Understood? This all item where I have written cross that were related to what? Investing or financing activities. Correct now? That will not be considered. That knowledge was not given in CA inter because that type of CA inter in CA inter exam, that type of question they are not asking. That they are not asking. Out of 10 questions, 1 question only of that nature. So normally we focus on 9 questions as a teacher. Because this much knowledge will give in CA inter. So CA inter student will leave only. But nahi padna ja. Are you getting what I am saying? Correct. So this is actually the point where they will hit you in exam. Where they will hit you in exam. Got this point what I am saying? It means current asset you understood. Now my question, whether non-current asset will be considered. Now you, no. If you are saying yes, means you are thinking. If you are saying yes, means you are thinking. Which non-current asset? You said yes, now. Advance to supplier. Means can I say anything which is advance to supplier may or may not be non-current, huh? Because I don't know why you are saying non-current, but my question to you, whether debtor can be non-current. Whether debtor can be non-current. Yes, it can be non-current. Creditor can be non-current. Means non-current asset may be operating, and that operating item will be considered. The basic formula is what? It is not asset. It is not current asset. It is not. It is what? Operating asset and operating liability. So all operating asset and operating liability will be considered यहाँ पर, which can be either current or what? Non-current. So only operating asset and operating liability will be considered. Deferred tax asset will be considered. I am coming to tax. Tax सुनता तो नहीं जो पढ़ा वो सुनना. Coming to tax. Correct. This much you understood? So therefore I have given one note that examples of non-operating current asset, non-operating current liability which will not be considered for calculation of changes in working. I have given some few examples. Interest receivable, interest payable, FD, short-term borrowing including bank overdraft, loans and advance given. Because loan given is what? One type of investing activities. One type of investing activities. Chalega? This much you understood? Then after this we get cash generated from operation, and from that Ind AS 7 says that just write down income tax payment separately. So any income tax paid will be written separately after that. So less income tax paid on net basis. Net basis means if suppose there is a refund also, it should be net of refund. Net of refund. So this become cash flow from operating activities. Now because of this reason, because income tax payment requires separate disclosure in cash flow statement, any current tax liability or current tax asset will also not be considered in this. So any current tax asset and current tax liability will not be adjusted in operating asset and operating liability, because income tax payment require separate disclosure. So current tax asset, current tax liability are also operating. Current tax asset and current tax liability are also operating, but that will not be considered यहाँ पे. Why? Because income tax payment require separate disclosure. So one note I have given: current tax asset, current tax liability should not be considered, because it should be shown as a separate item under cash flow from operating activities. Understood this point? Now from examination point to write down some note. Write down some note. Suppose they have given non-current asset. Non-current asset. Sorry, non-current. Suppose they have given other non-current asset or other current asset or other non-current liability or other current liability, and question is silent. Question is silent. See whether it is operating or non-operating. So if question is silent, assume operating item related to operating activity and consider this in what? Working capital changes. Understood this point? This general assumption, you can't change it. You can't change it. Now about financial asset. Financial asset. Correct. Normally in financial asset, they give loan, investment like this. So if specific point I give, and we need to apply as per specific. Correct. But doubt will come for other financial asset. Other financial asset. Are we able to understand what I am saying? other financial asset. In this doubt will come. Correct. Similarly, if financial liability is there, the doubt will come for what? Other financial liability. So if nothing is given, this will be also what? Operating assumption. Have you understood this point? If suppose they have given for financial asset loan is investing activity, investment is investing activity, trade receivable is an operating activity. If they have given the description, then we'll go as per description. Correct. Now one more doubt will come. Suppose they have given only financial asset in the balance sheet and nothing has been given. This is not other, only financial asset given. So if it is non-current, assume investing activity. If it is current, then assume operating activity. Understood what I am saying? If they have given only financial liability and nothing has been mentioned, whether it is a borrowing or trade payable. So if it is non-current, we'll assume what? Financing activity. And if it is current, then we'll assume what? Operating activity. And this is the general assumption from this chapter point of view. And this assumption you should not change. Have you understood this point? Have you understood this point? चलेगा? Simple. I think this will help you in exam. Okay? Okay. Because normally they give this type of point in exam. So we have understood the working capital changes also. Done. Left? But this is non-current. Okay, sir. Then there are some special points from which either 5 marks question can come or it can be MCQ based question. First thing, can we report cash flow on net basis? Can we report cash flow on net basis? Well, no. We should report cash flow only on gross basis. Only on gross basis. Correct? Means I'll just give one example. Suppose you have interest income of rupees 1 lakh. On this TDS has been deducted 10,000. So can we write on inflow 90,000? Well, no. This 90,000 is not correct. You should write on interest income how much? Inflow is how much? 1 lakh. And TDS tax paid how much? 10,000. So we should write on what? Gross basis, not on net basis. Understood? Correct? Yes, sir. Then there are some special points that if suppose there is any PP which has been acquired for rental purpose, means any PP which has been acquired or constructed for let out and subsequently held for sale in ordinary course of business. So initially it was PP and then it become inventory. So the question is that purchase of that PP will be investing activities or operating activities. So one clarification has been given because actually this was a part of ordinary activities only. Initially it was for rental purpose, but actually the ordinary business was to sell in the ordinary course of business. Therefore all activities will be what? Operating activities, whether it is acquisition and construction of PP, operating, rent received will be operating, and sale of such asset will be also operating. Till now this point has not been asked in exam. Chalega. Then operation of financial companies. Operations of a financial company. So for financial company, for example, banking company or any financial institution or a non-banking financial company, their main business is to what? Give loan or do investment only. So all these will be what? Operating activities. So for them, purchase and sale of investment will be operating activity. Cash advance given or loan given will be operating activities. Any interest received will be operating activities. Any deposit received will be operating activity. Any interest paid on such deposit will be also operating activities. However, for a company means other company, for other company, this will be what? Investing activity. This will be what? Investing activity. This will be what? Investing activity. This will be what? Financing activity. This will be what? Financing activity. चलेगा. Then interest and dividend for financial company and for other company. Correct. Any interest paid will be for financial company operating, and for this what? Financing activity. Interest received will be operating, investing. Dividend received will be operating, investing. But dividend paid, be careful. Dividend is paid on equity capital, share capital. Therefore, for both it will be what? Financing activities. Chalega? Understood? So this type of question can be also asked. Recently a very good question was given in RTP. Can you do right now? Do this right now. 21. Doubt may come because I have not done all the points. Let's apply your common sense and do it. For both, financial company means financial company and other company. Do for both. Done? Let's see what you have done. But interest received on loan and advance given. So I think in this, so no doubt. This is operating, this is investing. Interest paid on deposit, operating, financing. In this also no doubt. interest and dividend received for on investment in subsidiaries, associate and in other entities. So can you see it is actually one type of investment in some other business to generate what? Profit. To generate profit. It is not for what? Business purpose. Are you getting? So this will be investing and investing. So this I think you have done correct or wrong? So chalo, if you have done wrong, so identify that. Dividend paid on preference shares, equity shares. So of course this is financing and financing. Finance charges paid by lessee under finance lease. So finance charges paid by lessee under finance lease, it is given under Ind AS 116. This will be financing activity, financing activities. Correct. And payment to a reduction of outstanding finance lease liability. Correct. I think the thoda sa question galat hai. Because can I say for lessee there is no finance lease. Actually this was a question taken from accounting standard and they have not corrected it. So as per AS 19 in the books of lessee there is an operating and finance lease, but there is no finance lease now. So we can correct this question. So just delete what? Finance term. It will be only lease na. For lessee, for lessor, yes there is a finance operating, but we are talking about right now lessee. The finance charges paid and any payment to a reduction of outstanding liability will be also financing activity. Means principal amount and interest amount both will be what? Financing activity. So this is actually given under Ind AS 116 in the disclosure part. Okay. Then interest paid to the vendor for acquiring fixed asset under deferred payment basis. If you remember, we have done deferred settlement term in Ind AS 16. So that will be what? Financing activity. But principal sum payment under deferred payment basis, that will be investing activity. So here doubt will come. Here we are saying what? Financing, but in this case we are saying what? Investing. Correct now, because lease liability is nothing but one type of finance we have taken. The word is only finance lease. Therefore both are what? Finance, financing activity. But in this case normally what happened? It is only the intention was to acquire asset on some deferred settlement basis. Deferred settlement basis. So interest portion will be financing activity, but principal payment will be for acquisition of what? PP, that will be investing activities. Then penal interest received from customer, operating. Penal interest paid to supplier, operating. Interest paid for tax payment, operating. Interest received, operating. I think this is no doubt. Good question. Now this type of question can be asked in MCQ format also. Then taxes of income, what they are saying, normally taxes of income will be classified as operating activities unless specifically specified. Means if the specific information has been given, then it can be classified as investing as well as financing activity. For example, dividend distribution tax paid. Now that it has been abolished, it has been withdrawn, but any dividend distribution tax paid will be financing activity. TDS on interest received will be investing activities, and tax paid on long-term capital gain. Long-term capital gain means on investment property, etc. will be investing activities. Correct. Then changes in ownership of interest in subsidiaries and other business. This is important what they want to say. Let's say, let me explain you this way. Suppose initially you acquire 20%, then again 20%, then again 20% in subsidiary. So on this date you got control. Then again you purchase 10%, then again you dispose 5%. So this is what? Changes in proportion of NCI in consolidated financial statement, and then again you sold 40%, so this will be loss of control, and then again remaining investment has been sold. So this can be the life cycle of investment in what? Entity. So what they want to say, whenever there is changes in proportion of NCI, this is changes in composition of equity. When NCI changes, means equity changes, so this will be financing activities, and other will be what? Investing activities. Understood? So all other investment will be investing activity, whether sale or purchase. But when you do further acquisition of shares, or when we do disposal of shares without loss of control, that will actually change your NCI. NCI means equity, so that will become financing activity. This we are discussing from separate or consolidated statement. We are discussing from consolidated financial statement point of view. In separate financial statement, all will be investing activities. All will be investing activities. Chalega? Understood this much? Then one more point they have said, just try to understand. Suppose you pass this journal entry INA account debit to cash, and the difference is goodwill. This is the acquisition entry. Cash you paid 10 lakh. But this INA also include cash and cash equivalent of the acquiry, and you receive 1 lakh cash and cash equivalent. Quite possible. So this will be investing activity, no doubt. Acquisition of subsidiary will be investing activity, but investment will be 10 lakh to 9 lakh. So it will be net of cash and cash equivalent received on the date of acquisition. So it will be 9 lakh, not 10 lakh. Similarly, when there is a loss of control, so you will say bank account debit to INA, and suppose you receive 10 lakh, but you have de-recognized cash and cash equivalent of rupees 1 lakh. So in this case also this will be investing activity, but the amount of inflow will be what? 10 lakh minus 1 lakh, that is 9 lakh. Understood? Correct? That is only given in this para, you can read. Have you understood this point? Classification of cash flow from investing activity and then financing activity. Read color. That is only given. Correct. Then non-cash transaction. What Ind AS 7 says that any activities which are any investing or financing activity which do not involve the movement of cash and cash equivalent will be non-cash transaction and will not be included in cash flow statement. That will not be included, and for that only a disclosures are required. These are non-cash transactions. Okay, sir. Okay. Then foreign currency cash flow. In this class I will take time. Foreign currency cash flow. So can you see, whenever there is a foreign currency cash flow, there are 2 points. That foreign currency cash flow transaction will be recognized, which will be reported at transaction date exchange rate. So the cash flow inflow will be calculated based on what? Transaction date exchange rate. Correct? So cash flow arising from transaction are recorded at transaction date exchange rate. Correct? And now we'll do translation either on settlement date or reporting date. So there can be some exchange gain or loss. This exchange gain or loss are of 2 types, either realized or unrealized. So what they are saying, unrealized exchange gain or loss from changes in foreign exchange rate are not cash flow. So that is a non-cash income or expense. Let me explain. This is important from examination point of view. Suppose on 1/1/2023 you have done one sale, debtor account debit to sales, 10,000 into 80, 8 lakh. And so 80 means what? 80 means what? $1 is equal to 80. This is $10,000. Okay. Then what happened? 1/5/2023 you collected 4,000. So what you are going to do? Bank account debit to debtor, and suppose when you collected 4,000, the rate become 82. This will become 4,000 into 82. How much? 3,28,000. And this is 4,000 into 80. This is 3,20,000. And there will be an exchange gain of how much? 8,000. Then on 31st March 2023, you have a closing debtor of $6,000. And now the rate become 85. So there is a gain, exchange gain. So what Jain will do? Debtor will increase, debtor account debit to exchange gain, transfer to PL. This is also transfer to PL. Correct now? Understood? So this will be how much? 6,000 into 5. How much? 30,000. Understood this much? This much you understood? Means now if you prepare SOPL, in SOPL sales will come how much? 8 lakh. Exchange gain will come how much? Exchange gain will be 38,000. And let us assume cost of sales, is what? 6 lakh. So what is the total profit? Profit is equal to, it is 2,38,000. Can you see this is realized gain? This is realized and this is unrealized. Correct? Understood? So now what Ind AS 7 says that unrealized gain is not a cash flow. Understood? It is not a cash flow. But what adjustment is required? if you are calculating operating activities by using direct method, so can you see, you write down direct method, collection from debtor. So collection from debtor is how much? 3,28,000. You will directly prepare debtor account, you will get 3,28,000 now. So 3,28,000. And the payment to creditor, let us assume this all payment has been done, all payment, cost of sales, this all purchases were done in current year, all paid 6 lakh. So this will be 6 lakh. So what is the cash flow from operating activities? Cash flow from operating activities, how much? 6 lakh minus 3,28,000, how much? 2 lakh. So can you say, for direct method actually no adjustment required, directly you can take that from debtor account only. But indirect method means I am going to explain what indirect method, what you will do, batao. You will start from PBT, profit before tax, how much? 2,38,000. Correct. Then you will do plus unrealized exchange gain, minus करेंगे. Unrealized exchange gain, how much? 8,000. So this will become operating profit before working capital change. This is how much? 2,38,000 minus 8, 2,30,000. Then we'll do increase or decrease in debtor. Oh, sorry, my mistake. चलो फास्ट कर रहे तो भूल जा रहे, my mistake. ठीक है ना? Minus unrealized exchange gain, how much? 30,000. So this become 2,08,000. Now okay. Now we'll do increase or decrease in debtor. So opening debtor was 0, but closing debtor become how much? But the opening debtor is how much? 0. Closing debtor become how much? Bolo. Closing debtor is how much? This much time you will take. I am asking a पूरा question मैंने कर दिया. I am asking one question, you are taking so much time. Full explanation I have done. I am asking only one question, that also you are taking so much time. Well, listening or not listening? Huh? So I am asking what is the closing debtor? तो बोलो ना 5,10,000. You wait for others कि पहले others बोलेंगे फिर मैं बोलूँगा. हाँ? Wait for others. बोलो 5,10,000. तो बताओ increase or decrease? Increase 5,10,000 plus की minus. So increase in debtor, but when you do increase in debtor 5,10,000, this will become how much? बताओ? Minus, and what answer is coming? 3 lakh, and the answer will not match. It means some mistake we have done. So therefore this is actually not correct. And the same question will come in exam. So you will not compare with direct method now, and your answer will not match, and will not be able to identify what mistake you have done. So whenever this type of question comes, this too you have understood. In this too no explanation required. So because you have eliminated these, to take closing debtor at what? Initial transaction date exchange rate only. Means take 6,000 into what? 80. That is how much? 4,80,000. And this become 4,80,000 negative. Now your answer will match. Your answer will match. Match kya? How much? 2,72,000. Understood this point? याद रहेगा? Small point, but if this question will come, you will do mistake. 100% do mistake if you can't retain. However, there is one shortcut also, which actually ICAI has preferred in their solution, but I don't like that shortcut, because shortcuts are dangerous when you are not conceptually good. What is a shortcut? Ignore everything. Ignore this. So this will become 2,38,000, and then compare with what? 5,10,000. Your answer will match. Check karo. But this is bakwas shortcut. This is not conceptually correct, because when this is unrealized exchange gain, so that become non-cash, and non-cash item need to be adjusted to find out operating profit. So from my way, this is one shortcut which ICAI has done in one of the solutions. So why I'm explaining, because some student might have done in this way in their class. So I am just informing that I also know this point. It is actually shortcut but bakwas method. This is actually concept. Concept is this, and I will prefer that if you have understood, follow what? Concept. Chalega? Correct. Now this also you have understood. Now the last point of this, component of cash and cash equivalent and their reconciliation. So what Ind AS 7 says that we should also disclose the component of cash and cash equivalent. So component of cash and cash opening we should disclose, closing it may consist of cash in hand, it may consist of cash at bank, current account balance. It will include short-term investment which has been classified as cash equivalent, short-term investment which has been classified as cash equivalent, and then plus foreign currency. All the foreign currency will come, minus bank overdraft repayable on demand, minus bank overdraft repayable on demand. Now my one question, foreign currency. But the foreign currency, suppose 10,000 you have acquired, yeah, you have received in the current year or previous year, whatever you have received at what, 70, when the rate was 70, but now closing rate becomes 75. Understood? Correct. My question to you all, in this cash and cash equivalent, but you will take foreign currency at 70 or 75? Means when you acquired this foreign currency, that time rate was 70, but on closing, because this is also foreign currency monetary item translated by using closing exchange rate, that becomes 75. So in this cash and cash equivalent, when you will add foreign currency, you will take 70 or 75? 70. Akka 70? Correct. But in balance sheet, 70. Very good. In cash flow statement, you will take 70, but in balance sheet, you will take what? 75. And because of this reason, can I say cash and cash equivalent of cash flow statement will not match with the cash and cash equivalent with balance of balance sheet, and because of that is what is required? A reconciliation required between both. And can say because of this reason also balance the cash and cash we will not tally, because in balance sheet this is current liability, but in cash flow statement it is considered as what? A part of cash and cash equivalent. So there are two reasons. One reason is this, second reason is this, and therefore we prepare one reconciliation which is very very important from exam point of view. They have already asked, can be again asked. So we will start with, as per statement of cash flow, what is the cash and cash equivalent? Then can I say we will add unrealized exchange gain minus unrealized exchange loss, and then we'll add back bank overdraft which was deducted. So this will become cash and cash equivalent as per balance sheet. As per balance sheet. This is also important from exam point of view. Done. Cash flow statement is done. You want me to take one question on? Chalega. One question means one full question. Bolo. हाँ, I think question you can do ना. You want? चलो एक ले लेते हैं. Only I'll take one question related to operating activities. Assuming that investing, financing you can do. Is it okay? Where is Ind AS 7? Ind AS 7. This question recently added, not yet asked in exam, which cover all the points. Therefore, I have taken this question. Normally, it will cover all the points. The relevant extract of consolidated financial statement is given below. So one extract has been given because they have asked only operating activities. Because they have asked only operating activities. Property, plant, equipment, investment, associate, financial asset. Now you can see that only financial asset is given. Only financial asset, non-current asset, but operating, non-operating. Understand what I am saying? They have given only financial asset. Nothing has been given. So you will consider it as operating or non-operating. Huh? Refer my assumption. What assumption I have given? Huh? Investing na? So that assumption only applied. It is not an operating item. Now if you consider it as operating, then yeah. So this is non-current. If it is current, then we'll assume what? Operating. So assumption will prevail. This all assumption will prevail. Current asset, inventory, trade receivable, cash and cash equivalent, liability they have given. Current liability, trade payable. Extract of consolidated SOPL they have given. Revenue, cost of goods sold, GP, other income, operating expense, other expense, interest, share of profit of associate. My question is, the share of profit from associate is a cash item, non-cash item? Non-cash. Very good. Non-cash. Non-cash. Chalo. Then below information is relevant for A Limited Group. A Limited has spent rupees 30 lakh on renovation of building. A Limited charged the entire renovation cost to PL account. This is the error. So this type of point they give to disturb you. To disturb you. Normally I say think that when we will give error, so if you do one mistake, the entire solution become what? G. So this is only to create pressure in exam hall. Create pressure. Correct now? Yes sir. So 30 lakh, what effect will be there? Will add to what? PL. Means the journal entry with PP account debit to PL. PP account debit to PL. On 1st April 2001, A Limited acquired 100% shares in S Limited for a cash of what? 300 lakh. Fair value of the assets and liability assumed are given. PP, inventory, this all given. You can see cash and cash equivalent taken is how much? So 300 minus 20, but the 280 will be which activity? Investing activity. This will be investing activity. Correct? Okay. A Limited property, plant and equipment is given. Carrying amount how much? 4650. Addition given 800. Out of this 800, but the how much acquired from subsidiary company? 140. So how much purchase in cash? 660. So this will be which activity? Investing activity. However, they have not asked investing activity in this question. I am just explaining the entire question. Suppose they ask investing, so what we are supposed to do? Revaluation surplus, nothing. Disposal or sale of asset. My question, this 490 is sale price or carrying amount? This 490 is sale price or carrying amount? Sale price. चलो बाद में देखते हैं. Depreciation for the year. This is non-cash. This is non-cash. ठीक है ना? Means this will be charged to PL, but depreciation is not given separately. It might be included in other expense. Correct? Yes, sir. A Limited constructed a machine that is a qualifying asset and incurred construction cost of rupees 40 lakh that has been charged to other expense. This is also an error. 40 lakh has been charged to PL. So PP account debit to what? PL will do. Of the interest cost 110 lakh charged to PL account, 10 lakh should be capitalized interest cost on specific borrowing that need to be capitalized. So out of 110 lakh, you can see how much given, interest expense given how much? 110 lakh. So out of this 10 lakh will be capitalized. So your interest expense should be only what? 100 lakh. That rectification also required. So we will do what? PP account debit to PL. PP account debit to PL. Property, plant and equipment was sold at 630 lakh. Now say, this is 490 is sale price or carrying amount? Carrying amount. Okay. Normally when we deduct any amount from carrying amount, it cannot be sale price, it will be carrying amount only. So what is the gain? Gain is what? 630 minus 490, how much? 140 gain. So gain will be also included somewhere. कहीं ना कहीं तो include होगा ना. So this gain on sale will be adjusted. They have given gain on sale is adjusted against operating expense. वाह रे वाह. ठीक है. A Limited purchased 30% interest in an associate for cash on 1st April 2001. The associate reported a profit before tax 400 lakh and paid dividend of rupees 100 lakh for the year. But what is journal entry for this 400? 30% is how much? 120. What journal entry? Investment account debit to sharing profit. Transfer to PA already transfer 120. What is journal entry for dividend received from associate? Dividend received from associate in CFS as per Ind AS 28. Bolo? Investment account debit. I am asking journal entry. Bank account debit to investment. So bank account debit to investment. What is the amount? 30%. ना? हाँ right. कहाँ लिखा? फिर से पढ़ो, क्वेश्चन पढ़ो. Read question. Read question. ठीक है ना? Okay. ठीक है. The associate reported. They have not seen it is the profit of investor and paid dividend. They have not received dividend. If received dividend, then what? 30%. But paid dividend, na? Who will pay? So they will pay 100%. But investor will receive 30%. Understood? English is a very funny language. Okay? Okay. Understood this point? So this point I will explain to us separately. However, there is no impact in operating activities for this. So this point will not affect your operating activities because 120 lakhs is given in SOPL, that will nullify. That will nullify, but I'll explain separately. Impairment loss, they have given goodwill impairment loss 265, intangible asset impairment loss 900. This is also non-cash, will be eliminated. The goodwill impairment loss relate to 100% subsidiary. Assume that interest cost is all paid in cash. Means there is no payable. You are required to determine cash generated from operations. Very good. Correct. This is the question. So okay, first we will find out rectified profit. So rectified profit will what? What is the profit given? 1840. 1840 plus 30. Plus 30. Then plus 40. Then plus 10. How much? So what is given? 1920. But working note is required. Nothing in calculator. Huh? Nothing calculated in exam. Working note is required. Then I am just explaining with solution. Can I explain? Then we will find out non-cash expense. Whatever I am asking, that only you say. But what are the non-cash expense? Depreciation. Then impairment loss on goodwill and intangible asset. Then sharing profit from associate. Then only this much. ठीक है? Correct. देखो क्या क्या depreciation they have done, impairment goodwill they have done, intangible asset impairment they have done, sharing profit they have done. चलो. Now non-operating item बताओ what we have. Non-operating item. Interest expense how much? Interest expense how much? 100. Very good. 100. 100 means already we rectified. Out of 110, 10 has been capitalized. So now in SOP only we have 100. Any more item? Profit on sale of PP. So gain on sale of PP how much? 140. So can this become operating profit before working capital changes? This become operating profit before working capital changes. Now I am doing this question for these 3 points. These 3 points. Already this type of question have been asked in exam. When this question was asked in exam, that was super easy question. Only one adjustment was given related to this. And when this question came, I said Gaya. Every student will do wrong. Why? Why I said Gaya, you know? Because I know in day 7 no one revised before exam. Whenever this type of question will come, I know 70-80% will do it, but they will not do correct. So only I am doing this question for what? This particular point. Now you can see subsidiary company has acquired, parent company has acquired inventory, trade receivable and trade payable of which company? Subsidiary company. So that become a non-cash acquisition because they have acquired now, and that has nothing, there is nothing now. Whatever cash has been paid, that is related to what? Investing activities. Therefore that will be adjusted to calculate working capital changes. Whenever this type of questions come, you need to prepare one more working note. What working note you will do? What working note you will do? First you write on closing receivable. Closing. I am just writing inventory, trade receivable, trade payable. First write on closing. Closing is given how much? You have inventory how much closing? Inventory how much closing? Closing 1550. 1550. Then trade receivable 1250. Then trade payable 15 50. Then from this minus acquired from what? Subsidiary company. Minus acquired from subsidiary company. So what is acquired? Batao. It is inventory how much? 60, 20 and 50. 60, 30 and 50. 50. Then give me the net amount. 4090. Then compare with what? Opening balance. Now after comparing opening balance, this will be considered as increase or decrease. This will be considered as increase or decrease. So be careful about this point. Already asked in exam, can be repeated in exam. Understood? After doing this, then can I say you can get you can easily get what? Cash generated from operation. There is no income tax given, so that will be what? Cash generated from operations only. Correct. Only I like to explain the investment account. Now in this investment account, suppose they ask all activities. You need to prepare one investment account also. Investment associate. So can I say they have not given this has been acquired at which amount? This has not been given. Because they have given only closing balance. Closing balance given how much? For investment associate? It is given 4750. 800. 800 is given. Now they have given sharing profit is how much? 120. And by bank dividend is how much? 30. So what is the bank? Means how much it was acquired? 800 plus 30 minus 120. So this becomes 710 acquisition cost. Dividend is 30 na? Dividend is 30 na? Correct? So acquisition cost becomes 710. So this will be known considered as investing activity, and whatever dividend you have received, that will be also considered as what? Investing activity. And this dividend received is not transferred to PL, so will not be adjusted while calculating what? Cash flow from operating activity. So this was one point which may be asked in exam by way of what? Investing activities also. So be careful. Chalega. With this Ind AS 7 done. All the points I have covered from examination point of view. So only 2 Ind AS we have done till now. Okay. Okay. We'll take a break. 30-minute break. Then we'll do the balance 4 Ind AS. Huh? ठीक है ना? Okay. I'll take. Huh? Why not same timing? Tomorrow is something. Huh? अच्छा अच्छा. I will adjust. Morning I will start. Hello. Hello. Chalo. Can we start once again, everyone? So now we'll take Ind AS 19, employee benefit. Now, then what? Cash flow statement. Any interest, whether it is on qualifying asset, whatever, you are paying for taking loan, na? The loan is what? Financing activities. So that will be also what? Financing activity, okay? When you are preparing PP account, okay, this is the opening balance. Suppose you purchase during the year, okay, and then you paid some interest expense which has been capitalized. So this is for purchase, this will be investing activity. This for interest, this will be financing activity, okay. So we are not here for cost, we are saying it is capitalizing the cost. So out of that cost, what is payment component, that you need to find out, na? What are the payment component? Prepare one PP account. So any borrowing cost which has been capitalized, that has been paid for which activity? For taking loan or for what? PP. It has been capitalized, but it is for loan, means financing activity, okay. Chalega? Yes sir. Now coming to Ind AS 19. Ind AS 19 is very simple from examination point of view. Why? Because once again they are very limited questions and they are asking that question only in exam. So from examination point of view it is not difficult, it is very simple. So Ind AS 19 is employee benefit, means it is applicable for all employee benefit expense except employee share based payment, because for employee share based payment Ind AS 102 will be applicable. What do you mean by employee benefit? All form of consideration given by entity in exchange for services rendered by employee, that will be employee benefit. Now employee benefit include any payment made either to employee or their dependent or their beneficiaries, correct? Now the employee can be full-time, part-time employee, permanent employee, casual employee, temporary basis, or it can be director or any other management personnel. So employee include directors or any other managerial person. Only exception is what? That employee will not include any contract labor or training. They are not employee of the entity. Employee may include unskilled employee, semi-skilled employee or skilled employee of whatever nature. So entity is required to recognize all employee benefit arising from either contractual obligation or constructive obligation or due to legal obligation. Means it may arise from formal practice or informal practice or due to legislative requirement. For accounting purpose, all the employee benefit are divided into 4 categories. One is short-term employment benefit, then long-term employment benefit, then post-employment benefit, and then last termination benefit. Correct. Now, first let us come short-term employment benefit. So, short-term employment benefit means what? Any employee benefit which are expected to settle wholly before 12 months after the end of reporting period, means which are payable within 12 months. That becomes short-term employment benefit. It will include wages, salary. It will include any profit sharing bonus which is payable within 12 months, or any short-term compensated absences. It will also include any short-term compensated absences. Now, for short-term employment benefit, what Ind AS 19 says that it will recognize as an expense and liability at an undiscounted amount. At an undiscounted amount, so no discounting is required. Of course, this will be recognized as an expense when the employee has rendered services, means in the year in which the entity has received services. Correct. Accounting treatment very simple. If the benefit received and amount paid, so it is EB expense account debit to bank. If benefit received but amount is payable, so it is EB expense account debit to payable. If the benefit not received but the amount has been paid, so that will be prepayment. Then it will be prepaid expense account debit to what? Cash or bank. So normally cases short-term employment benefit expense will be recognized as an expense unless it is capitalized to the cost price of asset as per respective Ind AS. So we have seen that in inventory the direct labor can be capitalized. It can be included in the cost price of inventory. Then it will not be charged to PL as an expense. It will be added to the inventory or PP, etc. Then it will be charged to PL when the respective asset become an expense. Understood? Yes, sir. This short-term compensated absence require थोड़ा सा understanding. So what they want to say कि any short-term compensated absences for accounting treatment, what will do means if any absences has been availed during the year, so already that leave has been availed during the year, then no treatment is required. Means suppose 30 days paid leave has been granted to you and you have availed it, then no treatment is required. But if you have not availed and it is non-accumulating means if you have not availed, it will not be carried forward, then it will be withdrawn and no accounting treatment is required. But if it is accumulating which can be carried forward, then some accounting treatment is required. It depends upon whether it is a vested leave or unvested leave. Vested leave means what? Ki you will get some cash payment against leave. Unvested leave means what? You will get leave against leave. So whenever vested leave, so we need to recognize the expense. We need to recognize the cost of such leave as an expense immediately. So how to calculate that cost? First we need to find out number of unavailed leave multiplied by salary per working day. So that will be what? The amount of EB expense will pass one journal entry, EB expense account debit to payable, and EB expense will be recognized as an expense in the books of account. But if it is leave against leave, then we recognize expense but with a proportionate amount of provision. With a proportionate amount of provision. It means what will be the amount of provision? We'll first find out number of availed leave multiplied by probability of availment. Probability of availment multiplied by salary per working day. The formula become number of unavailed leave multiplied by probability of availment multiplied by salary per working day. Now whenever question is silent about availment of leave, we'll assume that it is 100%. So suppose the unavailed leave is 20 days. Now as per the past experience, management is expecting that this employee can avail only 12 days leave in the next year. So we'll make a provision for 12 days, will not make a provision of 20 days. So this information will be given the question. If not given, we'll assume entire leave will be availed in the next year. Correct? Understood? So then 12 multiplied by salary per working day will do. Salary per working day will do. Now just try to understand. Suppose unavailed was 12, but you have created provision for 12. But in next year, can you see you may avail 12 only, or you may avail more than 12, or you may avail less than 12. These three situations may arise. So irrespective of actual availment, whatever provision you have created in last year, that will be reversed. So whatever provision you have created, that will be reversed in next year. that will be reversed in next year. Means actual availment is not at all important. So suppose you have created a provision for 12 days, you will do reversal for what? 12 days only. So next year the entire provision will be reversed. So what journal entry will do? For unvested, for current year, EB expense account debit to provision, and next year the entire provision will be reversed, the provision account debit to EB expense. For vested, current year will do EB expense to payable, and the next year payable account debit to cash or bank. Done? Understood? We'll take one question for this only for practice. What they have given? Mr. Niranjan is working for Infotech Limited. Consider the following particulars. Annual salary 30 lakh, 30 lakh. Number of working days 300, 300. Leave allowed 10 days, 10 days. Leave taken 7 days, 13 days. Leave unutilized 3 days and nil. Based on the past experience, Infotech Limited assumed that Mr. Niranjan will avail unutilized leave of 3 days. So 3 days means it will be fully availed. It means we will create provision for 3 days only. Correct? Infotech Limited contend that it will record 30 lakh as EB expense in each of the year, stating that the leave will in any case be utilized in the next year. Come into the accounting. So of course this accounting statement is not correct. So whenever this type of questions come, first you need to find out salary per working day. What is salary per working day? 10,000. 10,000 in both the year. So that will be total salary divided by number of working days. Number of working days. So that becomes salary per working day. Understood? Then you need to first find out what is the brought forward leave. So in the first year it is 0. Then how much leave allowed? 10 days. Then leave availed 7 days. So what is unavailed leave? Unavailed leave is what? 3 days. So it means you should create a provision. It means you should create a provision for what? 3 days. And they have given the probability of availment is also 3 days. So your provision for the first year will be how much? 30,000. Provision for the first year will be 30,000. Means your expense become what? 30 lakh plus 30,000 means 30 lakh 30,000. 30 lakh 30,000. Understood? Have you understood this point? Correct. Next year, can you say this will become the brought forward leave? Again, leave allowed 10 days, and they have taken 30 days, so it become nil. Means whatever provision you have created that require reversal. So what journal entry will do? Provision account debit to EB expense. So your EB expense will decrease by 30,000. So it means your EB expense will become 29 lakh 70,000. 29 lakh 70,000 that only has been given. Chalega? Understood? Simple? Correct. So this type of question can be asked in exam, in MCQs as well as what? A 5 marks question can be also asked. Okay sir? There are some more questions given in ICAI statement that you can refer. Okay. Then to short term employment benefit this much only. Now let us come to post employment benefit plan. Now post employment benefit plan has been divided into 2 parts. Post employment benefit, one is known as DCP. DCP means what? Defined contribution plan. One is known as DBP, means defined benefit plan. So normally in DCP what happens? Ki employer need to contribute some amount to a separate entity that is known as plan asset, and their obligation is limited to that amount contributed. Understood? Because case that the plan asset will pay directly to employee. Means if the plan asset is not able to pay to the employee, then there is no obligation of employer to compensate employee. It means once that amount is contributed, that becomes at the expense of entity. So in case of DCP, correct, DCP means defined contribution plan, the amount to be contributed will be recognized as an expense and liability in the year in which they are liable to contribute. correct, and it will not be recognized as a asset, only this much, correct, understood. So this the example is PF, ESI, etc. The example become PF, Provident Fund, ESI, etc. Got this point? Normally in this plan, normally what happens, both employer and employee contribute. So right now we are discussing about employer contribution. We are not discussing about employee contribution, because employee contribution is a part of short-term employment benefit. So employer contribution will be also recognized as an expense and liability in the year in which they are liable to contribute. Only this much for what? DCP. Correct. Understood. Now coming to DBP. DBP, what they say, this is only important from examination point of view. So defined benefit plan, what they are saying, in this plan the benefit is defined but the amount of obligation is not defined. Means we don't know ki actually how much amount is required to be paid after retirement, but benefit has been defined, and the amount of obligation depends upon many uncertainties, because amount will be paid after retirement. So we don't know actually when the employee will retire. We don't know whether they are eligible for that plan or not. Correct now. For example, let us assume that an entity has announced a plan for all the employees, that any employee who is completing a minimum year of 5 years of services will be entitled to, let us assume, 40% of last drawn monthly salary for each completed year of services. Understood what I am saying? This is the plan. The plan is already announced, but can I say when it will be paid? When it will be paid, that is not known. What amount we are supposed to pay, that we don't know, because that is based on the last drawn monthly salary, that also we don't know. So lot of uncertainties are there. Therefore Ind AS 19 says that you should take the help of actuary. So actuaries are expert in calculating that amount. Understood? They make estimate based on some assumption. That assumptions are known as actuarial assumption. There are two types of actuarial assumption. One is known as demographic assumption. One is known as financial assumption. So this is what we are going to study. However, assumption, that is not important. What type of question they may ask, that is important. Correct? Are you getting what I am saying? So suppose this is the plan announced. So they may give you some information. Means can I say we need to estimate. We need to do on some estimation basis. So suppose it is given that number of completed year of services will be 5 years. This I am just taking one example. So this estimation is required, and suppose the salary will grow at 10% per annum, compounded annually. The growth rate of salary is given. Discount rate will be also given. Discount rate suppose given 13%. So based on this information, we need to find out the 3 points. We need to calculate current service cost. Second, we need to calculate interest cost, and third, we need to calculate present value of defined benefit liability. So they may ask you to calculate these. Understood? So whenever this type of questions come, so first we need to calculate last drawn monthly salary. So of course salary I have not given. Let us assume salary of current year is, let us assume 40,000 per month. And it is given that it will grow by which rate? 10% per annum compounded annually. So we'll do 1.10, 1.10, 1.10 and 1.10. This becomes salary of first year, this is second year, this is third year, this is fourth year, and this fifth year. So we'll multiply with 1.10 only for 4 times. It will become salary at the end of fifth year. Salary at the end of fifth year. How much it is coming? 64,420. This become what? Last draw monthly salary. Or it might happen this is given in the question only. Correct. Then we to calculate projected benefit. We'll calculate what? Projected benefit. Are you getting what I am saying? Projected benefit is as per the plan, how much benefit is payable after retirement. So that will be 40% of what? 64,420 multiplied by 5 year. 5 year completed year of services. How much it is coming? 1,28,840. Means whenever this type of question is given, number of employees not given, we'll assume only one employee is there. Suppose they have given 100 employees, so multiply by 100 kar do. Multiplied by 100. Understood what I am saying? Correct. Then we find out allocated benefit. Allocated benefit. So as per Ind AS 19, it will be allocated equally over 5 years. So we'll do divide by 5. How much it is coming? Divide by 5. How much? 25768. 25768. Correct. Then we'll calculate what? Current service cost. Current service cost. So we need to find out Y1, Y2, Y3, Y4, Y5. What is the allocated benefit? 25768. 25768. 25768. 25768. 25768. Okay, this is at year end 1. Means we are actually calculating at year end 1. So this is payable after 4 years. This is payable after 3 years. This is payable after 2 years. This is payable after 1 year. This is payable after 0 year. 0 year means what? Immediately. Now we need to find out discount factor at what rate? 13%. Can you give me discount factor? By using 13%. 0.885 for which year? You are not concentrating, it means I have already explained. This is payable after 4 years. This is Y0, this is Y1, this is Y2. So this will be 1. This will be 0.88. Double 85, then 783, then 69, then 613. Then you can find out current service cost. This become current service cost. Can you give me? 15,000. 796, then 857, then 20,176, then 805, then last I will give. So this become current service cost. Simple. Understood. Then last we'll prepare one liability statement. Liability statement. So that will be for Y1, Y2, Y3, Y4, Y5. We'll start with the opening balance of liability. Then we'll add interest cost. Then we'll add current service cost. And that will become what? Closing balance. So first your opening liability is 0. Interest cost 0. And current service cost how much? 15,796. So this become 15,796. Second year 15,796. Interest at what rate? 13%. How much? 2053. Then current service cost how much? 17,857. This coming how much? 35,706. 35,706. 1 second, 13% how much? 4642. This is 20176. Correct. 60521. Correct. So 60521. Then how much? 786 said. Then 22805. 91194. Now last year interest will be calculated as a balancing figure. This become 25768, and this projected benefit, this will be equal to projected benefit. So what was the projected benefit? 1,28,000, 28,840. So what is the difference coming? 11,878. This become a liability statement. So this type of question can be one question where they will ask you to calculate current service cost, interest cost, as well as present value of defined benefit liability. So this is known as present value of defined benefit liability. Understood? What journal entry you are doing for interest cost? Interest cost, so it will be interest cost account debit to present value of defined benefit liability. What is journal entry for current service cost? Current service cost account debit to present value of defined benefit liability. Understood? Correct. Now can you see this liability statement? Actually we are preparing at year end 1. So again this is for current year and this is for future year. These are future year now. Now future year the assumption may change. If assumption change, so there will be some remeasurement is required. Some remeasurement is required. So what Ind AS 19 says that if suppose the assumption has been changed in for future year, then opening liability need to be remeasured as per the new assumption, and that remeasurement gain or loss, the remeasurement gain or loss means opening liability increases, so it is a loss. Opening liability decreases, then it is a gain. So that remeasurement gain or loss will not be transferred to PL, it will be transferred to OCI and accumulated in a separate component equity, which will not be recycled to PL. Which will not be recycled to PL. So this is known as actuarial gain or loss. Actuarial gain or loss on defined benefit obligation, and will be known as what? Remeasurement gain or loss, which will not be transferred to PL, will be transferred to OCI and not recycled to PL. Understood this much? So there are three items. First we have understood current service cost, then interest cost, and then remeasurement gain or loss. Remeasurement gain or loss. Understood? So now let us come to what? The topic. This much you understood? So you can see defined benefit plan. Already I have said for defined benefit plan, Ind AS 19 has given projected unit credit method. Projected unit credit method means what? The entire projected benefit will be allocated equally. So that is known as projected unit credit method. Now to calculate present value, Ind AS 19 says the discount rate should be determined by reference to market yield on government bond. Market yield on government bond. So this may be important for MCQs. Market yield on government bond as on reporting date. As on reporting date. Now actuary will estimate the amount of obligation and they will take actuarial assumption. This can be of two types: demographic assumption and financial assumption. Demographic assumption and financial assumption. Chalega? Yes sir. Now accounting treatment DBO for current service cost margin entry. Current service cost account debit to present value of DBO. What is journal entry for interest cost? Interest cost account debit to present value of DBO. What journal entry will do for actuarial gain or loss? So if actual loss, it is remeasurement loss account debit to present value of DBO. Remeasurement gain, what journal entry? Means actuarial gain, what journal entry? Present value of DBO account debit to actuarial gain. So can you see this actuarial gain or loss will be recognized in OCI without recycling it to PL as remeasurement gain or loss. This much understood? Correct. Now this current service cost will be shown under EB expense. Correct. But this interest cost will be shown under finance expenses, finance cost, as a finance cost. Got this point? Yes, sir. Now, if this much you understood, now let us come to plan asset. Plan asset. Now, normally, what is the difference between DCP and DBP? That I need to explain. DCP and DBP. Accounting treatment of difference is there, but why that difference arises? In DCP, what happens? Suppose this is entity and these are the employee. Both will contribute to a separate entity, and this can be either a state plan, it can be either a state plan or multiple employer plan, or it can be insured benefit plan. It can be insured benefit plan. Correct. So they will contribute to a separate entity, which is in this chapter known as plan asset. We call it what? Plan asset. Correct. So this separate entity will do further investment in some outside area. They will do further investment in risk-free securities. They will get some return after holding some return for their admin purpose. This entire return belong to whom? Employee. So on retirement, they will pay the contribution. Contribution is both contribution plus what? A reasonable return to whom? Directly to employee. Directly to employee. Means can I say, whenever plan asset do investment, there are two type of risk. One is known as investment risk. One is known as investment risk. One is known as actuarial risk. Investment risk means what? Ki the value of investment may decline in future. That is known as investment risk. Actuarial risk means what? Ki you are getting less than expected. Suppose you expected that you will generate a return of 10%, but you are getting a return of 8%. That is known as actuarial risk. Actuarial risk. Can you see in case of DCP both risk fall into employer ki entity? Employer ki employee. So in case of DCP defined contribution plan, both risks fall onto what? Employee, not to entity, because can you see plan asset is not able to repay employee. The employer has no further obligation to repay to what? Employee. Therefore this investment risk and actuarial risk both fall onto what? Employee. In case of what? DCP. And therefore in the books of entity we recognize this plan asset, means whatever amount contributed, as an expense, not as a asset. But in case of DBP, the same thing remains. DBP means defined benefit plan, it's same thing, but in DBP what is not required? Employee contribution is not required. Only who will contribute? Employer. Only who will contribute? Employer. Same thing, but in this case the plan asset will first pay to what? Entity. They will pay to entity, and then entity will pay to whom? What? Employer. Means in this case investment and actuarial risk fall on to whom? Employer, and therefore the amount contributed will be recognized as an asset, and the name of the asset will be plan asset. It means, can I say, now for this type of account, this type of transaction, we need to also open a plan asset account in the books of what? Entity. In the books of entity. Correct. So this is more important from exam point of view. Accounting treatment of what? Plan asset. Accounting treatment of plan asset. Understood? So what will be journal entry? Batao. Can I say plan asset? So for amount contributed, what journal entry? Plan asset account debit to bank. So plan asset account debit to bank. Correct. Now whenever retirement happens, so can I say this, from this plan asset, employer will withdraw the amount and then pay to whom? Employee. So there are two transactions. First, benefit, the amount of benefit to be paid, amount of benefit payable will be withdrawn from what? Plan asset, and then will be paid to what? Employee. So amount withdrawn will decrease your plan asset. What journal entry will do? Bank account debit to plan asset by bank. Correct. And then when paid to employee, then what journal entry? So then your liability will decrease. Then what journal entry? Present value of DBO account debit to bank. Present value of DBO account debit to bank. Understood? So can you say for contribution paid? Yep, for contribution, for the contribution amount to be contributed, what journal entry? Plan asset account debit to bank. For benefit paid out of plan asset, what journal entry? Bank account debit to plan asset, and then present value of DBO account debit to bank. Understood these 2 points? That is only given for contribution to plan asset, for benefit paid out of plan asset. There are 2 journal entry. 2 journal entry have been understood. If question is silent, always will assume that these 2 amounts are same. Means whatever you have withdrawn, that only you have paid. If the question is silent, practically it can be different also. But if question is silent, we'll assume whatever you have withdrawn, that is only paid. So if suppose in the question they have given benefit paid. Benefit paid means you have withdrawn the same amount and then paid to what? Employee. So in exam they will say benefit paid. Don't be confused. Benefit paid means what? Amount withdrawn and then paid. Chalega. Now what Ind AS 19 says that we should also recognize interest income, which is calculated based on discount rate. Which is calculated based on discount rate. So we'll calculate interest income on plan asset by using which rate? Discount rate. Discount rate will be same rate of interest whatever you have used for present value of DBO. So what journal entry will do? Plan asset account debit to plan asset account debit to interest income. This interest income will be transferred to PL net of interest expense. Means what Ind AS 19 says that will transfer net interest cost, yeah, net interest income to PL. So net interest cost or income will be what? Interest expense on DBO minus interest income on plan asset. That become net interest cost. Correct. For example, suppose the fair value of plan asset is 2700. Correct. And they have given DBO how much? 2040. So your plan asset is more than what? Liability. And they have given discount rate 6%. And they have given expected return on plan asset 5.5%. But you will calculate interest expense by using which rate? Interest expense by using which rate? 6%. And you will calculate interest income by using which rate? Interest income by using which rate? 6%. So this expected return on plan asset is not at all important. Not at all important. However, this expected rate of return actually was used in AS 15, which has now been removed from what Ind AS 19. But in exam question, they may use this type of terminology, to be careful. We calculate interest cost and interest income both by using which rate? Discount rate. Discount rate. Correct. So can I say the interest income will be your net defined benefit asset, because asset is more than liability. So this becomes 660. So directly you can apply 6% to what? 660. That becomes net interest income. Net interest income. This net interest income will be transferred to what? PL. So what journal entry you have done for interest income? Plan asset account debit to interest income. So normally what happens, just try to understand what they want to say. Ki this discount rate is just an expectation. Ki this much minimum you should earn. This much minimum you should earn. So this is nothing but one type of expected income. But your actual income may or may not be equal to expected income. So suppose you are expecting 1000, but you actually earn only 800. You actually earn only 800. So this difference will be known as actuarial loss. Or if your actual income is more than expected income, the difference will be known as actuarial gain. So there will be 2 types of actual gain or loss. One is actual gain or loss on DBO, already we have understood, and one is actual gain or loss on plan asset. So how to calculate actual gain or loss on plan asset? First calculate actual return, then compare with expected income, the difference will become what? Actuarial gain or loss. So we'll not call it expected income in exam. We'll not call it expected income in exam. We'll call it interest income. But okay, this is one type of expected income. It is one type of expected income. But don't use this terminology in exam, because Ind AS 19 has not given this terminology to this type of income. They have said these are interest income included in net interest cost. Correct? So how to calculate actual return, that we need to understand. How to calculate actual return, that we need to understand. For that I have taken one question. I'll take that question to explain that. There is that question. Chalo, I'll take the question of ICAI study matter only. So this is the question 36. On 1st April 2000, the fair value of plan asset is 10 lakh. The plan paid benefit of rupees 1 lakh 90 and received contribution of 4 lakh 90 on 30th September. The company compute the fair value of plan asset 15 lakh and the present value of DBO is 14 lakh 79,200. Actuarial loss on defined benefit obligation 6,000. So this is given actual loss on DBO. DBO, correct? Compounding happen half yearly. Okay, sir. Now normal interest rate for 6 month period is 10% per annum, while the effective interest rate for 12 month period is based on following data. On 1st April 2000, the company made the following estimate based on the market price at that date. Particular interest and dividend income less tax payable by the fund, add realized and unrealized gain on plan asset, less admin cost, expected rate of return 10.25%. Actually what happened, this question was actually institute has taken from AS 15 and they have not modified this question. Are you getting what I am saying? They should modify it now. Are you able to understand? Because this information has not been given under Ind AS 19. AS 15 used to say कि determine expected rate of return based on this. So actually this is a para of what? AS 15, which should not be given in Ind AS 19 question, but given, so you should not be confused. If given, so you should not be confused. Are you getting what I am saying? Correct? So we want discount rate, we want expected rate of return. So this is given what? So this is bakwas information, this is bakwas information. However, when this question was given initially, so this was not the question. Then after that they realized that mistake and they modified it. But then also modification was not perfect. What modification they have given? This 10% is what? Annual rate of interest, but effective rate of interest is what? 10.25%. What do you mean by effective rate of interest? Means 10% per annum compounded half yearly and 10.25% per annum. Whether they are same or different, that may be same. For example, just try to understand. If I am saying 6 months, first 6 months, if your principal amount is 100, so it will be 10% into 6 by 12. So it will be what? How much? 5. And for the next 6 months, your investment amount will be 105 into 10% into 6 by 12. How much it is coming? 5.25. So your effective income is how much? 10.25 per annum. So 10% per annum compounded half yearly is nothing but 10.25% effectively per annum return. Understood what they have done? Not able to understand mathematics. Correct? So can you say 10% per annum compounded half yearly is nothing but 10.25% per annum effectively? So can you say now both are same only actually, but then also they have used the word what? Expected rate of return. Are you getting what I am saying? So they should not use this type of terminology in Ind AS 19 question. But can I say either you take this or this, your answer should be same or not? Either you use 10% or 10.25%, your answer should be same or not? So we want discount rate and discount rate is given. So why we don't require effective rate of interest? Am I right or not? Correct? Yes, sir. Then they've given determine actual return and then they have not corrected this. They should correct this also, na? Ki now there is no concept of what? So they should say interest income included in net interest cost. चलो ठीक है, माफ किया उनको, ठीक है ना? So you need to understand the emotions of question. So this type of questions come. So you are not calculating expected income, you are calculating interest income only, which is calculated by using what? Discount rate. Understood this point? Also compute the amount to be recognized in OCI. This is the question. Right. So how to calculate? How to calculate? So first we'll calculate interest income. Interest income. So first 6 months, batao, what was the amount? Opening balance means what is the fair value of plan asset at the beginning? 10 lakh. 10 lakh into what? 10% into what? 6 by 12. How much? How much? 50,000. Then last 6 months, can I say opening balance was 10 lakh? Then how much contribution made? How much contribution made? It was 4 lakh 90. So plus 4 lakh 90, how much benefit paid? 1 lakh 90,000 will be minus, and this 50,000 will be reinvested. So this become the last 6 month amount into what? 10% into 6 by 12. How much? 67,500. Total become how much? 1,17,500. This become your interest income. Got this point? Or can we calculate in this way? Ki I will say 10 lakh is invested throughout the year. 10 lakh is invested throughout the year. And what is the effective rate of interest? So we'll do 10.25%. How much? 1,02,500. And then what was the contribution? 4 lakh minus what? 1 lakh, because both done at the same date, into what? 10% for how many months? 6 by 12. How much it is coming? 15,000. Answer is same or different? It will be same only. It will be same. Now ICAI has given answer based on this, but I will say why we require this. We know mathematics, so we can calculate in this way also, na? Both are same calculation only, na? One is based on compound rate of interest. One is based on what? Effective rate of interest. Understood? Correct? Got this point. Simple. Now we'll find out actual return. So how to calculate actual return? We'll first find out fair value at year end. But what is the fair value at year end? 15 lakh. Then we'll compare with the carrying amount at year end. Carrying amount. But what is the opening balance? 10 lakh. What is the contribution received? 4 lakh 90,000. What is the benefit paid? 1 lakh 90,000. What is the carrying amount? 13 lakh. So 15 lakh, 13 lakh now become how much? 15 lakh. The 2 lakh become what? Your actual return. It become actual return. Understood? So your actual is 2 lakh. Your expectation was how much? 1 lakh 17. So what is the actuarial gain? What is the actuarial gain on plan asset? How much? 82,500. And what was the actuarial loss on DBO given? How much actuarial loss on DBO given? It is 6,000. Given 6,000. So what is the net actuarial gain? 76,500. This will be transferred to PL or OCI? It will be transferred to OCI. It will be transferred to OCI. Understood? This is the entire calculation, could be asked in exam for 5 marks. Understood? Same question I do in CA Inter now, because AS 15 is there now. Same to same question. Understood? Simple. Simple. Understood this point? So this you have understood. Now coming to the next point, that is only given remeasurement gain or loss. The actual return on plan asset excluding the amount included in net interest on defined benefit liability is a part of remeasurement. So for actual gain, what journal entry? Plan asset account debit to remeasurement gain or actual gain, whatever term you can use. For actual loss or remeasurement loss account debit to plan asset. Chalega? Then how to calculate actual return? Same formula, whatever I have used, that is given. How to calculate remeasurement gain loss? Compare actual return with interest income, that will be calculated. Now coming to past service cost. Now what Ind AS 19 says that if any plan has been modified or amended or newly introduced or withdrawn, so there may be some past service cost for the prior year. We suppose today any plan has been modified or introduced, so there was some employee before that also. So because of that modification, either there will be increase in present value of DBO or decrease in present value of DBO. So increase in present value of DBO will increase the expense, decrease in present value of DBO will decrease the expense. So that will be known as what? Past service cost. That past service cost can be negative or positive. Negative means what? It is reduction in expense. Positive means what? It is increase in expense. So this past service cost will be transferred to PL immediately. Only this much. So entire past service cost will be charged to profit and loss account as an expense immediately. Correct? That is only given. So what journal entry will do? If past service cost will increase liability, then journal entry is past service cost to present value of DBO. If that will decrease, then present value of DBO account debit to past service cost. Simple. Correct? Then gain or loss on settlement. So of course, can I say at the time of settlement means when the benefit is paid, if the amount of benefit paid is less than, can be less than or more than estimated liability. So if you are paying more, that become what? Loss on settlement. If you are paying less, that become what? Gain on settlement. So the gain or loss on settlement will be transferred to PL immediately. So what journal entry will do? For payment present value of DBO to bank, any difference will be what? Gain or loss on settlement. Chalega? Understood? Simple. Okay. So gain or loss on settlement also understood. Now how to present DBO and plan asset in the balance sheet? So what Ind AS 19 says that the fair value of plan asset will be not shown as a separate asset in the balance sheet. It will be deducted from present value of DBO and net amount will be shown as a liability in the balance sheet. So this net amount will be shown as a liability under the head provision, under non-current liability. So it will be shown under non-current liability as provision. Chalega? Yes sir. But sometime what happen? If the fair value of plan asset can be more than what? Present value of DBO. So if the fair value of plan asset is more than what? Present value of DBO. So what Ind AS 19 says that it has a surplus. But this entire amount of surplus cannot be shown as an asset. So there is some ceiling limit on asset part. So what Ind AS 19 says that whenever present value of DBO means whenever plan asset has surplus, then in that case the net defined benefit asset will be lower of these two. This can be asked in MCQ now. MCQ question. Net defined benefit asset, because now plan asset is more than liability. So the net amount is an asset. So net defined benefit asset will be lower of what? The surplus as calculated above, and the asset ceiling determined by using the discount rate. The asset ceiling. So now we need to understand what do you mean by asset ceiling. However, in exam they will give you the amount of asset ceiling. So what do you mean by asset ceiling? Asset ceiling is the present value of any economic benefit available in the form of refund available in the form of refund from the plan or reduction in future contribution to the plan. Just try to understand. Suppose you are getting surplus यहाँ पर at this point of time, but as per the agreement with the plan asset, this might be refunded after 10 years. This amount might be refunded after 10 years. So suppose it is refunded after 10 years, so you need to calculate present value of this. So you are getting 20 lakh यहाँ पर, but present value become 19 lakh ना. So it means your assets should be 20 lakh or 19 lakh. Your assets should be 19 lakh. Lower of these two amount, lower of these two amount. Correct. So of course in exam they will give asset ceiling. Don't worry, we'll take the lower amount and difference will be transferred to what? OCI. The difference will be transferred to OCI. Chalega? Yes sir. So asset ceiling, I hope you have understood this point. Correct. Now remeasurement gain or loss comprise of three elements. First, can I say actual gain or loss on DBO? Then actual gain or loss on plan asset, actual gain or loss on plan asset, and changes in plan asset ceiling. Any changes in plan asset ceiling will be also transferred to OCI. Then they may ask you to prepare one reconciliation statement for DBO and plan asset. This is important from exam point of view. This is important from exam point of view. In exam, normally they ask you to calculate either the closing balance of DBO and plan asset, or they may ask you to find out remeasurement gain and loss. So if they ask you to find out remeasurement gain and loss, this is a balancing figure of this statement. This is a balancing figure of this statement. Understood? Correct. So this may be important from exam point of view. So what they want to say, let me take one question based on this. How to calculate this reconciliation statement? Correct. Batao. A limited prepare. I will just write down all the amount in this only. So you will understand what is this reconciliation statement. Okay, now. A limited prepare the financial statement for 31st March each year. It operates a defined retirement benefit plan on behalf of current and former employees. A limited receive as advice from actuaries regarding contribution level and over liability of plan to pay benefit. On 1st April 2017, the actuaries advised that present value of defined benefit obligation was how many crore? 6 crore. On the same day, the fair value of asset of the defined benefit plan was 520 lakhs. I am writing in lakhs. Okay. So DBO is how much? And plan asset is what? 520. Okay. Then on 1st April 2017, the annual market yield of government bond is 5%. This is discount rate. Correct. Be careful, it is always market yield or government bond. Sometimes they may give market yield on some other bond, means high quality corporate bond, etc. That will not be taken into consideration. Only market yield on government bond. During the year ended 31st March 2018, means closing date, A Limited made contribution of 70 lakh into plan asset. So made contribution, but this will affect which account? DBO or plan asset? Only plan asset will add 70 lakh. Will add 70 lakh, na? Correct? Yes, sir. It will not affect DBO account. It will not affect DBO account. Then the plan also paid. The plan paid out of benefit 42 lakh on to the retirement member. How much they have paid? 42 lakh. This will affect which account? Plan asset account or benefit paid account? Means DBO, both. It will affect both. So can you see, we'll do 42 minus. Here also 42 minus. Yes. Then next point is what? Both these payment were made on 31st March. Can you see, because both the payment are made on 31st March, then there is no need to calculate interest on that. In the last question you can see the contribution benefit was made at the mid of the year, therefore we calculated interest on that also. But for this question no interest, because the payment has been done and receipt has been done on 31st March. So be careful about this date in exam. In your exam question they may give 30th September, then you have to calculate 6 month interest on that. Understood what I am saying? So be careful about this date. However, no interest, so interest will be calculated only on opening balance. Only on opening balance. So interest, what is the rate? 5%. 600 ka 5% how much? 6% ka 600 ka 5%? 5%, 30 na, 30, and 520, it is 26. Understood this point? Chalega? Yes sir. Then what is given? The actuary advised the current service cost for the year end date was 62 lakh. So current service cost, okay, current service cost will affect only DBO account. So we'll add 62. Then what is given? On 28 Feb 2018, the rules of plan were amended with retrospective effect. So amendment means past service cost. Past service cost will come. This amendment means that present value of DBO was increased by 15 lakh. Increase means negative past service cost or positive past service cost. Positive past service cost. The past service cost become 15 lakh. So we'll add past service cost how much? 15 lakh. It will affect only DBO. It will affect only DBO. Chalega? Yes sir. Then during the year ended 31st March 2018, A Limited was in negotiation with the employee representative regarding planned redundancies. Planned redundancies. So it is nothing but they are just decreasing the number of employees. Redundancy means they will decrease the number of employees. When they will decrease the number of employees, so DBO will decrease, and there will be some settlement also. So there will be gain or loss on settlement also. The negotiation was completed shortly before the year end and redundancy package was agreed. The impact of this redundancy was to reduce the present value of DBO by 80 lakh. So what was the liability which got reduced? 80 lakh. But the payment was made how much? 75 lakh. But what is the gain on settlement? 5 lakh. So what is the benefit paid? What is the benefit paid? 75 lakh. Benefit paid is 75 lakh na? Correct. So it will affect which account? Benefit paid will affect which account? Both account, because first we withdraw from what? Plan S, and then we'll make payment. However, it is given in the question also. If you read the entire question, even though not given, we'll do that only. Because these payment were made out of the asset of retirement benefit plan. Even though this point is not given, we'll assume that it has been withdrawn from what? Plan asset only. Chalega. So how much? 75, 75. So we'll make payment 75, 75. Correct. I'm writing this is benefit paid. And what is the gain on settlement? So that will affect DBO account only. So DBO will decrease by what? 5 lakh also. So total decrease is 80 lakh. Total decrease is 80 lakh. Understood. Then they have given on 31st March, they have given closing balance of what? DBO and plan assets 680 and 560. It will be 680. The closing balance is 680 and 560. So can you see, you can easily find out this balancing figure. This balancing figure. So this will be remeasurement gain or loss. If liability increases, so it will be loss. If liability decreases, then it is gain. If asset increases means what? Gain. That you need to be careful whether it is a loss or gain. Understood this point? Have you understood this point? You can easily calculate this. So this type of question can be asked in exam. However, sometimes ICAI has done this calculation on net basis. I don't prefer net basis in exam. So from my point of view, always use gross basis, don't use net basis. Net basis may be dangerous. However, you can do, this will be what? 80, this will be 62, this will be what? 4, this will be what? 15, correct now? Then what? Contribution is 70 minus, then but the benefit paid will be what? Benefit paid will be how much? 0 na? 0. This is dangerous. When you do net basis na, so you will take benefit paid also. But benefit paid will not come because net amount will be 0 na? Correct. And then gain on settlement how much? Minus 5. And then closing balance will be 680 minus 560 na? How much? 120. And then find out the balancing figure. This will be remeasurement gain or loss which will be transferred to OCI. So you can also do on net basis, but don't prefer this. Do in what? Gross basis only. So this is one of the question which may be important from exam point of view. Now once you have understood post-employment benefit plan, then much discussion is not required for long-term employment benefit, because long-term employment benefit are those benefits which are payable after 12 months but before retirement. But before retirement. This is not 62. ठीक है ना, हो गया. Concept you understood ना? अच्छा, he is saying that, sir, this 6 year कर दो. Understood concept you understood ना? Sorry everyone, it is blunder mistake. नालायक. नहीं, I am actually नहीं, देखो, I am not worried about her. I am worried about others who don't cross check, and even though cross check has not informed me. But who is more wrong? The person who is doing mistake, or the person who is not cross checking or not identifying, or identify but not disclosing? No, you are not sorry. They should be sorry. I am correct. They should be sorry. Because someone is sitting silent. अरे छोड़ना, मैं तो calculate नहीं करूँगा. And someone is like that. I calculated, but I will not say. Yes ना. अच्छा, how many of you calculated correctly? But you have not informed me. Sir को करने दो, गलती करने दो. अच्छा, what you have written? You have written 64,420 or what? Understood? And you are not sorry. They are sorry. You have to realize and you have informed me. चलो ठीक है. Sorry, this amount was not correct. If you found any mistake in this, correct it. This is what? कितना आ रहा है? 58,560. 58,564. Then do accordingly. The process remains same. The process remain same. 1 second तो ना करेंगे revision class में. Correct? The process remain same. Concept you understood ना? Concept everyone understood? Correct? These all mistakes are counted in exam. Understood what I am saying? Have you noticed why I have taken 4 times? This 5 year, so why I have taken 4 years? Understood na? 4 times. Because this is y1, this is y2, this is y3, this is y4, this is y5. चलो ठीक है, जिंदाबाद. Okay. क्या? What happened? बोलना. चलो. What I was saying मैं याद कर रहा था. This तो you have understood now, everyone. Amount was wrong, but the process was correct. So think about process, don't think about amount. ठीक है, चलो. Now coming to long-term employment benefit. So long-term employment benefit, normally they don't ask any question, but with MCQs all are important now. So long-term employment benefit means these are the employee benefit which is settled within 12 months after the end of reporting period. After the end of reporting period. For example, some consideration is payable after 5 years to the employee. That become long-term employment benefit. So entire accounting will be the same as we have done for defined benefit plan. Accounting remains same. Only one difference. In this case, any remeasurement gain or loss will not be transferred to OCI. It will be transferred to PL. So entire accounting treatment remain same. Only the remeasurement gain or loss will be transferred to PL, will not be transferred to OCI. However, if question is silent, suppose in exam, in MCQ question they ask you about remeasurement gain or loss, then do answer, give answer based on what? Short term. In short term, where is remeasurement rate? 1 second. We have done right now post-employment benefit plan, defined benefit plan, and long-term employment benefit plan. Accounting treatment is same to same. Means current service cost, interest cost, remeasurement gain and loss, plan asset, contribution received, all point remain same. Only one difference is what? In that case, remeasurement gain loss will be transferred to OCI and will not be recycled to PL. But in this case, immediately remeasurement gain and loss will be transferred to PL. But suppose in exam they ask you what is the accounting treatment of remeasurement gain and loss, and question is silent about these two, then answer based on what? OCI, then transfer it to OCI. Question remain silent because no question of this nature has been given. So if they are asking, they have an intention to ask that only. So if they are asking, it means they have an intention to ask that. Also, one more point for MCQs. Whenever you have doubt now, suppose you have doubt. Now MCQs, so you are writing in your answer paper only. You are not supposed to go Gola. Gola is not there. Gola is there. They will give Gola. Omar. चलो ठीक है, देन गोला मारो. ठीक है. I was thinking that Omar paper will be not given, but if suppose I don't know because this is the first time say, about old syllabus. So suppose they are not giving Omar paper and you are supposed to write down answer in your answer paper. Then if you have doubt about option number 1 and option number 2 depending upon assumption, so give both the answer. If the doubt is there, so answer 1 A if this assumption, B based on this assumption. Write down both answers. Are you getting what I am saying? Not able to understand. Have you understood this point? But in Gola you can't do like this, na? Gola, both Gola means wrong. 2 Gola means what? Wrong ho gaya na? Huh? Shunnya, 0. Once again, if you are writing in paper, then only, don't give 2 Gola. Correct? Then they will give bada Gola. Okay. So have you understood what I am saying? So you suppose there are 2 options and both options are correct based on different assumptions and they have not given that point in question. So of course doubt will come. You can write both answer in what? In your answer paper, but when you are writing in answer paper, then only. Okay? Omar may don't give, then whatever I have said, the best assumption will prevail. The best assumption will prevail. Now termination benefit is also very simple. Termination benefit arises only due to termination of employee. So it will be recognized as an expense and liability when both the following conditions are satisfied. There must be present obligation arising from past event and the amount can be estimated. These are the 2 conditions, very simple conditions. Now only the one point which you need to understand, or I will say 2 points which may be important from exam point of view. See how to account for termination benefit, when to recognize and how to recognize. So how to recognize, very simple. If it is payable within 12 months, then at undiscounted amount. But if it is payable after 12 months, then at discounted amount. Correct? How to recognize, you understood? So when it is payable within 12 months, then undiscounted basis. Payable after 12 months, then at discounted basis. Correct? But when to recognize, I am just give you one point. See, we have done Ind AS 37 restructuring. We have done Ind AS 37 restructuring. Now restructuring says that the provision for restructuring cost will be required, will be recognized when 2 conditions are satisfied. When 2 conditions are satisfied. Remember restructuring. Now suppose we have decided to terminate one of the factory, and at this point of time a plan was made, and at this point of time announcement was made, and at this point of time actual closure happened. So the termination benefit will be paid at this point of time. Termination benefit will be paid at the time of closure, na? Correct. Now as per Ind AS 37, when these 2 conditions are satisfied, we should recognize provision for restructuring. It means, can I say, we should recognize on estimated basis. So termination benefit recognized at this point of time, or at this point of time, whichever is earlier, either at this point of time or at this point of time, whichever is earlier. Understood this point? So that is only given. Now if you read, you will be able to understand. It is at the earlier of when the company can no longer withdraw the offer of those benefits, means when it is payable, and when the company recognize the cost for restructuring in Ind AS 37 and involve the payment of termination benefit, whichever is earlier. So this type of question can be asked in MCQ format. Done. Ind AS 19 completed. Ind AS 19 I will say they are given, I think मुश्किल से 8 to 10 good questions. Correct ना? If you can do that question, तो 5 marks, 6 marks, 7 marks question will be of that nature. ठीक है? If you can do that, that is the only Ind AS 19 coverage. Ind AS 19 also done. Now let us come to Ind AS 108. Ind AS 108 is super important. I don't know why they ask always this chapter. This is super important because they know that the student will not revise. Ind AS 108. Last time also they have asked. Every time they are asking. Now, Ind AS 108 means operating segment. Operating segment. What is the meaning of operating segment? Operating segment is a component of entity that is engaged in business. That is engaged in a business activity for which it may earn revenue and incur expenses. So which are engaged in business activity for which it may earn revenue and incur expenses, and whose operating results are reviewed by CODM. CODM is what? Chief Operating Decision Maker, and for which discrete financial information are available. Means for which information are available separately, then only we can disclose. Correct now? So for this information, financial reporting purpose means what? Financial information are available. Means revenue is available, expense are available, assets are available, liability, that information is available. Then that become an operating segment. If these three conditions satisfied, so that component become operating segment. Now what Ind AS 108 says that the operating segment can be identified either based on product, or based on location, or based on the class of customer. For example, if I say my operating segment can be on the basis of product. For example, I create basically FR one product, then advanced accounting CA inter product 2 product. So based on 2 product, I can divide my entire entity in 2 operating segments. If I say based on location, so there are 2 locations in Hyderabad. One is SR Nagar, one is Himayat Nagar. Correct. Basically, when I started teaching, I used to teach in 3 cities: Bangalore, Hyderabad, and Kolkata. Now I have stopped everywhere. I teach only in Hyderabad. But that time 3 cities I need to move. So that become based on location, or based on class of customer. So for me, you are customer. So I have 3 class of customer. One is what? Face-to-face student. One is what? Live online student. One is what? Recorded class student. They are my class of customer. So normally I divide my operating segment based on class of customer. If you ask me, sir, on what basis you divide your operating segment? So I basically divide based on what? Face-to-face student, live online student, and what? Recorded class student. Are you getting what I am saying? So we can divide based on this. Okay, this is totally based on the management discretion. Totally based on the management discretion. Now when I say business activity, so for this chapter, business activity will be both activity with external party as well as inter-segment. Inter-segment means other segment, means it will include both external sale as well as inter-segment sale. Now how to identify operating segment? So they have given 3 conditions. First, ask one question: is the component is able to generate revenue? Able to generate revenue means if any component is able to generate revenue in future, then also it is what? The condition is satisfied. Understood? For example, can I say, if I say research and development department, that is also one component, but they are not able to generate revenue anytime, so that is not an operating segment. That is not an operating segment. Are the operating results are reviewed by CODM? If yes, is the discrete information for the component available? If yes, then it becomes our operating segment. So this 3 question is important from examination point of view. MCQ question can be asked. Yes, sir. Then this one topic of matrix form of organization. What they want to say is, sometime what happens, suppose we have any entity has product 1, product 2, product 3. So they will appoint manager based on this. One manager for this, one manager for this, one manager for this. It means, can I say, it means the operating segment is based on what? Product. But suppose the same entity has 3 locations, location 1, location 2, location 3, and they have appointed manager based on this also. It means operating segment can be based on location also. Now one doubt will come, operating segment is based on product or based on location. This type of organization is known as matrix form of organization. So in that case, what Ind AS 19 says that operating segment will be based on the core principle of the entity. Core principle of the, what is the keyword? Core principle of the entity. Core principle means ki the objective of the business based on which they want to provide information to the user. Normally can you see in MOA we have one objective clause, in memorandum of association we have one objective clause, but just refer that, find out the core principle entity and just find out how you want to provide information to the user, whether it is based on product or based on location. Understood? So once again, this is totally based on what? Management discretion. They will only decide. Chalega? Yes sir. Then aggregation criteria. This might be also important for theory question. Can we aggregate two or more operating segment as a single segment? Two or more operating segment as a single segment for disclosure purpose. For which purpose? Disclosure purpose. Yes, if the following conditions are satisfied. So two or more operating segment may be aggregated in single operating segment if the segment have similar economic characteristics. Similar economic characteristics means they must have same risk and return. So if they have same risk and return, it becomes similar economic characteristic. Correct? So they have similar economic characteristics and the segment are similar in each of the following aspects, and they are also similar in each of the following aspects. First is what? Nature of product or services. Nature of product or services. Then what? Nature of production process. Nature of production process. Class of customer. Class of customer. Method used to distribute the product and the nature of regulatory environment. If they are similar in each of the following aspects, then it can be aggregated, otherwise it will not be aggregated. They will give one case study, just apply this and give the conclusion. If you are not writing this content, they will not give mark. Correct? Understood? The first condition was they must have similar economic characteristics and they should be also similar in each of the following aspects. Can you repeat with me? First is what? Nature of product or services, then nature of production process, then class of customer, then method used to distribute the product, then nature of regulatory environment. I'll just give one example. Suppose there is a silk. Silk in you? Silk means what? Not dairy milk silk. Silk means what? Fabric. Now it can be machine made, it can be handmade, but their risk and return are same or different? Their risk and return are same or different? The price are same or different? Different. And can I say the production process also different, and therefore it cannot be aggregated. It cannot be aggregated. Understood? Correct? I have just given one simple example. Chalega? Understood. Then next point is reportable segment. This is important from exam point of view. Normally they ask a question based on this. So two questions are important from exam point of view. One is reportable segment and one is disclosure requirement. So reportable segment means what? They have given how many criteria? They have given 4 criteria. If any one of the criteria satisfied, it become reportable segment. It become reportable segment. So what they actually want to say, first identify operating segment. Suppose operating segment A, B, C, D, E, F, G. These are the operating segments. Then out of this identify what? Reportable segment. Suppose this is reportable, this is reportable, this is reportable, this is reportable. So only we should disclose information for what? Reportable segment. For other, there is no need to disclose any information. But this EFG I will discuss after some time. But have you understood what first we need to identify what? Reportable segment. Based on how many criteria? 4 criteria. First is based on QT. QT means quantitative threshold. In QT they have given 3 criteria. One is based on what? Segment revenue. One is based on what? Segment reserve. One is based on what? Segment asset. So what Ind AS 108 says that if any one of the following QT, if any one of the QT is satisfied, then it become a reportable segment. It become a reportable segment. So first segment result is 10% or more of total segment revenue, my mistake. Segment revenue is 10% more of total segment revenue. Here segment revenue means what? Both external sales as well as inter-segment sales. So segment revenue will include what? Both external sale plus inter-segment sale. So what is the criteria? Segment revenue is 10% more of total segment revenue. Second is what? Based on segment result. What they are saying, segment result is 10% or more. 10% or more of combined result in terms of profit or combined result in terms of loss, whichever is greater in absolute term. Have you understood this point? Huh? Let me explain. Suppose A, B, C, D, 4 operating segments. Suppose first has 1000 profit, then 2000 loss, then 3000 profit, and then 1000 loss. Correct. So what they are saying, first find out the total of profit. Total of profit is how much? Then find out total of what? Loss. It become how much? 300. And take in absolute amount. Absolute amount means ignoring negative sign. So whichever is greater. So either this will be greater or this will be greater. In my example, 4000 is greater. So this become benchmark. Now based on 4000, calculate a percentage. So 1000 divided by 4000, how much? 1000 divided by 4000, how much? It is 25%. Then 2000 divided by 4000, 50%. Then 3000 divided by 75%. Then 1000, 25%. All are what? All are reportable. All are reportable. Understood this point? Correct? Yes, sir. So once again, can you repeat me? Segment result is 10% or more of point number A, combined result in terms of profit. Point number B, combined result in terms of loss, whichever is greater in absolute term. Then segment asset will be given, and segment asset is 10% more of total segment asset. Chalega. We'll take one question, but after all the criteria. Management discretion. What this criteria B says that any operating segment which are not reportable based on QT, can be added as per the discretion of our management. Means management can add any segment as what? Reportable segment. But this information is based on the information given. This point can be applied only based on the information given in the question. So not important from exam point of view. Then previous financial year reportable segment. So what Ind AS 108 says that if any segment was reportable in previous year based on the QT criteria and now is not reportable because it no longer meet QT criteria, then also it will be reportable in current year. For example, suppose A, B, C, D, E. Abhi suppose the current year is 2020-21. It was reportable based on QT, but no QT. Reportable become what? Yes. This yes, this is also yes. Based on what? Management discretion. And this is no. Understood what I am saying? So what are reportable segment? A, B, C, D. A, B, C, D become reportable segment. Now next year 2021-22. Batao. Suppose it meet QT, and now it meet QT. This does not meet QT. Batao. Which one is reportable? Huh? Yes. No, na. Yes. Chalo, ठीक है. You have understood. So can be asked in exam. So what they are saying? Any operating segment which was reportable during preceding financial year as it meets QT should be reportable during current financial year even if it no longer meet QT criteria. This last one is also important, and this will be applied even though question is silent, and question will be silent only. Correct. So the last point is important, will be applied even though question is silent. Correct. So what they are saying, if the total external revenue reported by operating segment constitute less than 75% of entity's revenue. But what do you mean by entity's revenue? Entity's revenue will be total external sale. See, external sale plus inter-segment sale. So it is only what? Total external sales. Correct. See, the total revenue reported by operating segment constitute less than 75% of entity's revenue, then additional operating segment will be identified as reportable segment until it include what? More than 75% or more than 75% of entity revenue in reportable segment. Understood? So this point will be applied even though question is silent. Let me take one question. Ind AS 108. You can see they have given this information. So first, so this total will do. This become what? Segment revenue. Segment revenue. Chalo. This to total you can do, everything you can do, and then we can calculate percentage. So percentage is this. Okay, this is reportable, this is reportable, this is reportable, this is reportable. Based on what? Segment revenue. I am assuming that you can calculate percentage. Then based on profit. So first we will take this total. How much it is coming? Bolo 4,500 plus 6,000, and then the loss total 2,250, whichever is higher. So now 3,000 divided by 6,000 you can do now. So you can calculate this percentage. So this is reportable, this is reportable, this is reportable, this is reportable, this is अच्छा इसमें तो लगा ही नहीं. All are reportable. Now तो all become reportable. So 75% वाला criteria नहीं लगा. Because if all are reportable, then 100% included. 100% included. But suppose let me take this question only. Suppose L, M, N are reportable. Let us assume L, M, N are reportable. Correct? Then first we will calculate external sale of what? L, M, N. How much total is coming? External. External is how much? 12,300. How much? 23,000. 5. So 23,550. Then can you give me the total external sale? It is given how much? 35,350. 35,350. How much it is coming? 60.62. So the last criteria not satisfied. So we should add some additional segment. So if question is silent, always assume the segment which have higher what? Higher external revenue. So you should add what? Okay, so we can add 5,500. So if you add 5,500, what will be the effect? Plus 5,500 divided by how much it is coming? So you can see condition satisfied. Therefore write down that based on the last criteria we should add what? That segment also, so that it include at least 75% of total external sales. And then reportable segment become this and this. Chalega? Thus. So this is also one favorite question of the institute which can be asked. This so without that now, if this question will come, it will be 4 marks or 5 marks. Don't expect more than this. 4 marks is difficult or easy? Very easy na. But once again writing part. Just try to understand. If you see this solution, they have written this much. This much they have written. But this much is not required. Just write down the keyword and write down this in your words only. If you write down this much now, you will not be able to complete the entire 100 mark paper. Correct now? Are you getting what I am saying? So write down, but in simple word. Very fast. Exactly same pattern is not required. Exactly same pattern is not required. Chalega? Okay. Then disclosure requirement. So disclosure requirement from examination point of view, I have just given this you can read by your own. From examination point of view, disclosure requirement will be done in this way. So one format I have prepared from all question can be done from this format. Correct? Now first you need to identify reportable segment. And normally Ind AS 108 says that reconciliation is also required. So for reconciliation purpose, can I say you need to also consider other segment which are not reportable? So any other segment which are not reportable will be combined and will be considered as all other reconciling segment. So suppose this is A, this is B, and C plus D plus E will be combined together. Understood what I am saying? Normally what I have seen in exam, they will give 2 or 3 segment, all are reportable only. So they normally don't ask this point in exam. They normally don't ask this point, but they may ask also. So be careful. You first identify reportable segment and then prepare what? Segment reporting. Till now this type of question has not been asked. Got this point? Have you understood this point? Okay. Now we should disclose first based on product 7 information. How many information? First is what? Segment revenue, then segment result, then segment asset, then segment liability, and 3 other information, that is depreciation and amortization expenses, capital expenditure, and other non-cash expenses. These are 7 information which is required to be disclosed. Can you repeat with me? First is what? Segment revenue, then segment result, then segment asset, then segment liability, then depreciation and amortization expenses, then other capital expenditure, then other non-cash expense. Only this much. Now for the first 4 they want reconciliation also. So I have just done that how to prepare an exam. So first write down revenue, then add on external revenue, then add on inter-segment revenue, then add on other operating revenue. So this become total segment revenue. But again this will not match with SOPL because this include what? Inter-segment revenue. So we'll deduct from this what? Inter-segment revenue, so that this will match with what? SOPL revenue. So this become reconciliation. In one format we are doing disclosure as well as what? Reconciliation, only from examination point of view. First you understood. Then we'll come to segment result. Normally they give segment result directly in examination question, but if not given, case it will be equal to segment revenue minus segment expense, segment revenue minus segment expense. So segment result is calculated, then you will add and deduct those items which has not been done segment wise. For example, interest expense, for example, head office expense, for example, any exceptional item. This become profit before tax, then deduct less tax expense, this become profit as per SOPL, and this will be reconciled. Then we write down segment means segment asset. So as we write down, first we write down segment non-current asset, segment current asset, this becomes segment asset. Then we'll add all those assets which remain unallocated. For example, investment, DTA, or any other unallocated asset. All the information will be given, only we need to take the data and write down in this format. Correct? Then we write down equity and liability. First we write down segment borrowing, segment current liability, this will become segment liability. Then we'll add unallocated liability, for example DTL or any other borrowing which remain unallocated to what? The segment. Correct? So this become total liability. In this we'll add equity, share capital, and also other equity. So this will become total equity and liability. We should match with what? Total asset. So reconciliation required only for this. Now for other information, reconciliation is not required. Just write down the amount given in the question. Then we should write down some information based on geographical location. So normally 3 information required disclosed for geographical location. First is what? External sale, only external sale. External sale. Then second is what? Segment asset, and third is what? Capital expenditure. So external sales, segment asset, and segment capital expenditure. This will be given the questions write down. Normally what happen? They will say in India and outside India. And outside India they will give information. And total you can take from above. So this will be balancing figure. In India will be balancing figure. Normally they are asking that type of question. Therefore I am explaining from examination question point of view. So they will give only outside India. So total minus outside India will be in India. Total minus outside India will be in India. So total you can take directly from above. This is what? Outside India. This is balancing figure will be what? In India. This type of question they normally ask. Same this question have been repeated 3 times. I don't understand why they ask the similar question. Means if you see this question now, this question have been asked 3 times in exam. And I hope everyone have done this question. Then also everyone do mistake. Why? Because we don't revise and we don't write properly in exam. If you are not writing properly in exam, you will not get mark. रट लेना इसको चलेगा. then Ind AS 108 over. Correct? Hmm? ना Ind AS 8 पहले करेंगे. Ind AS 1 थोड़ा ज़्यादा बोलना पड़ेगा. Ind AS 8. You want break? You want break? 5-minute break. Now, can we start once again, everyone? Now, let us start Ind AS 8. So, two Ind AS are left, Ind AS 8 and Ind AS 1. Ind AS 8 is what? Changes in accounting policies, changes in accounting estimate, and prior period item is error. Correct now. So, accounting estimate, accounting policy, and error. Mostly it is what? Based on changes in accounting policy. 90% of coverage will be for accounting, changes in accounting policy. Now, this is all definition, so you can read by your own. What is the scope of this chapter? To give the criteria for selecting accounting policy, to give criteria for changes in accounting policy, for accounting for changes in accounting policy, changes in accounting estimate, and correction of error. This is the scope of this chapter. But this chapter does not deal with the disclosure of accounting policy. It will not deal with the disclosure of accounting policy. It will also not deal with the tax effect of what? Any of this accounting treatment, means due to changes in accounting policy, changes in accounting estimate, correction of error, whatever tax effect, that is covered under Ind AS 12. Now, one of the MCQs I was reading of ICAI, they have asked the tax effect due to correction of error was covered under Ind AS 8, Ind AS 12, both or either. This type of options are difficult in exam. They will say both, either. You will be confused, na? Are you getting? Totally in exam, this type of options are difficult. So it will be Ind AS 12. Ind AS 12. So they are asking me, they can ask this type of question also, which require thorough understanding of the content. Chalega. Then definition, of course, you can do it. The first, accounting policy. What is the meaning of accounting policy? Accounting policies are specific accounting principle, basis, conventions, rules and practice applied in the preparation of financial statement. I think this does not require much discussion. How to select accounting policies? Means what is the selection criteria? What they want to say ki if any transfer, any transaction event, we have a specific Ind AS, then apply that specific Ind AS. Means for property, plant and equipment, you have Ind AS 16. Can you follow some other accounting policies? No. To follow what? Accounting policies given under Ind AS 16. But for any other transaction event, suppose we do not have what? Specific Ind AS, then what will do? Let us take one example. Suppose you receive grant from non-government organization. So one doubt will come whether Ind AS 20 will be applicable or not. Or suppose you purchase one ancient painting to display in what? In your cabin. Cabin means in your business premises. Understood now? One of the example was asked to me by one of the students ki in their client place they have purchased some music system for the recreational activity of employee. They purchase what? Music system. So they have a doubt which Ind AS will be applicable. That is for recreational activity. Now one doubt will come whether Ind AS 16 is applicable or not. Are you getting what I am saying? So that type of doubt may come. So in that case, management shall use their judgment to develop and apply accounting policies. Correct? So first, what they are saying, for this they need to apply the following source for the judgment, means how to make that judgment. So that is based on some mandatory source, and if mandatory source cannot be applied, then optional source. So first they should apply Ind AS dealing with the similar and related transactions. So can you see, if I am saying music system, so we can apply Ind AS 16. If I am saying ancient painting and that is held for capital appreciation, suppose they are held for capital appreciation, so we can apply Ind AS 40. And for government, for grant which we receive from non-government organization, we can apply Ind AS 20 because we have a similar Ind AS for that. But if you do not have similar Ind AS, then you should apply the conceptual framework, which is for what? Preparation and presentation of financial statement. Conceptual framework means chapter number 1, whatever we have done in the last day, correct? And if these two is also not, you can't apply, then we can go for optional source. For example, we can also apply most recent pronouncement by IASB. IASB means International Accounting Standard Board. Most recent pronouncement, so they give some accounting treatment for recent development. Or we can apply other AS setting bodies, accounting standard setting bodies. So we can use also AS issued by ICAI, correct? We can also use other accounting literature, for example US GAAP, or we can also use any accepted industry practice. So by following this, management should form their own judgment for developing the accounting policies. Chalega? Yes. Then consistency of accounting policy. So of course the entities should apply consistently same accounting policy for similar transaction, event and condition. However, different accounting policy can be selected and applied consistently for different category if Ind AS permit. If Ind AS permit. For example, can you say for PP, can you say we have different class of asset, land, and we have building. So for this we can follow cost model and revaluation model because Ind AS 16 permit. But if I say investment property, land and building, can we follow cost model and revaluation model? No, because Ind AS 40 do not permit what? Revaluation model. So we can go for what? Only what? Cost model. Understood? One example only I have given. Now changes in accounting policy. Can we change our accounting policy? Ind AS 8 says yes in two circumstances. First, when the change is required by Ind AS, or when the change will result in financial statement providing reliable and more relevant information, then we can change. Okay, first one is a mandatory change. Second is based on the management discretion, means it is voluntary change. Correct. The point number is thoda sa important कि the following are not a change in accounting policy, means it seems they are change in accounting policy but they are not changes in accounting policy. One clarification has been given. First, application of accounting policy which are differ in substance, then it is not a changes in accounting policy. Let me take one example. If initially you purchase car for rental purpose, so you applied Ind AS 16, but now that car was included in inventory for sale in ordinary course of business, so you will apply Ind AS 2. There is changes now. There is changes in accounting policy from Ind AS 16 to Ind AS 2, but here the transactions are differ in substance, and therefore we need to follow different accounting policy. So this is not changes in accounting policy. Understood? Second, application of new accounting policy for transactions which do not occur previously. So of course you will follow new accounting policy only. Third, application of new accounting policy for transactions which were immaterial during previous year. So of course you will follow a new accounting policy, a different accounting policy. So this will not be a change in accounting policy. Chalega? Yes sir. Then coming to accounting for changes in accounting policy. So what Ind AS 8 says that whenever there is changes in accounting policy, it may either result from initial application of new Ind AS or revised Ind AS. So whenever it is because of changes in Ind AS, so that Ind AS might have some transitional provision. So if that Ind AS has transitional provision, then apply that transitional provision for changes in accounting policy. Then there is no need to apply Ind AS 8. But if such new Ind AS or modified Ind AS do not have transitional provision, then apply what? Ind AS 8. Then apply Ind AS 8. Or if there is a voluntary change, then apply what? Ind AS 8. Understood? So in these two situations we apply Ind AS 8. Now Ind AS it says that any changes in accounting policy will be accounted on a retrospective basis, means apply changes retrospectively. What do you mean by retrospective accounting? Retrospective accounting means what? From the day one. Day one means suppose a company was formed in 1981 या 1947 कर लो. So we'll do changes from 1947 if from the beginning of previous year. From the beginning of previous year. Not understood. When I am saying retrospective accounting, suppose the company was formed in 1947. ठीक है ना? So retrospective accounting will be from 1947 if from the beginning of previous year. From 1947 is correct. From 1947 is correct, but doubt आया ना? Correct. It is from the beginning means from the beginning when the company was formed. Can I say practically impossible? And therefore, because of that reason, because just right, if suppose this is not so much difficult, then everyone will change. So they have given a complicated accounting. Intensely they have given a complicated accounting that you change only when required. Otherwise, don't change. Are you getting? Otherwise, so everyone will change. If they want to make higher profit, they will use some other accounting policy. If they want lower profit, they will use what? Some other accounting policy. Correct? That will be a type of window dressing then. Understood? So what they are saying, apply changes retrospective. So what they want to say, adjust the, what do you mean by retrospective accounting? Adjust the opening balance of equity, asset, liability for the earliest prior period presented as if the new accounting policy was applied from the beginning, means has been always applied, always applied, means what they want to say is, suppose this was the date of incorporation and this is the previous year and this is the current year. So you need to first find out the effect of changes in accounting policy. This is the cumulative effect of changes in accounting policy, and this effect should be given at the beginning of previous year. It will be adjusted with the opening balance of asset, liability, equity at the beginning of previous year. Then you should restate the previous year figure. So this becomes retrospective accounting. Retrospective accounting. Understood? Have you understood? Now, of course, we have understood that whenever there is a retrospective accounting, it will affect the opening balance of previous year. Therefore, Ind AS 1 requires third balance sheet in this case. So as per Ind AS 1, not as per Ind AS 8, as per Ind AS 1, third balance sheet is also required at the beginning of previous year. Understood? Now, of course, there is some exception to the retrospective application because we have understood there is some practical difficulty in applying that. So what Ind AS 8 says that changes in accounting policy shall not be applied retrospectively if it is impracticable to determine the cumulative effect of period specific effect due to changes in accounting policy. So if there is practical difficulty in determining period specific effect or cumulative effect due to changes in accounting policy, then they have given some relaxation for this. Correct? Now, to explain this, I have taken one example to what actually this means. An entity started a business in 2006. In 17, management changes inventory valuation from FIFO to weighted average price method. It is a voluntary change. Situation 1. All the records from 2006 are available. It means we need to apply full retrospective application will be applied from what? 2006. Situation 2. All records were available except for 2009 which were destroyed by fire. It means we can't calculate cumulative effect from the beginning. Therefore, in this case, impracticable to determine the period specific effect for 2009. Therefore, we'll apply partial retrospective application from which year? From 2010. Means ignore all the previous year. Correct. Situation number 3. No records of earlier year were available. Means all the records were destroyed. When I say record means financial statement or books of account? Financial statement will be available. Books of account destroyed. Okay. So no records of earlier years were available as virus attack on the server has damaged all the past records. So can you see in this case we can't apply retrospective effect from the previous year also because we do not have the records of previous year also. We have financial statement but we do not have books of account. So in that case we'll apply prospective accounting. Prospective accounting means from the current year. So impracticable to determine the cumulative effect of the changes, and the changes in accounting policy will be applied from 2017, that is prospectively. So either we need to apply full retrospective or partial retrospective or what prospective. Understood? Correct. There is some limited exceptions if is given also. Chalega. Then disclosure, you can read what are the disclosures requirement. Have you understood this particular point? Correct. Now, whenever there is a retrospective application, it means suppose the current year is 2023-24. It means can I say we need to prepare three balance sheet now. Correct. First is as on 31st March 2024, then 31st March 2023, and one is 1/4/2022 also. Correct. This is known as third balance sheet. So can I say we need to adjust the asset, equity and liability. We need to adjust this with the cumulative effect. Then we need to restate what? Previous year figure. And then current year figure does not require any restatement because it's the current year now. This will be as per new accounting policy only. This is what balance sheet. And case we need to prepare two SOPL or three SOPL? Two SOPL. Three balance sheet and two SOPL. We need to prepare two SOPL of what? 22-23 and 23 and 24. So this income and expense will be restated. Earning per share will be also restated. And then write down current year figure as per changes in accounting policy. So this is restated amount. Then we have to prepare also SOK. SOK means what? Changes in accounting policy. So first we write down balance as at the beginning of previous year means as on 1/4/2022. Correct. In this we'll do plus minus the cumulative effect. So this become restated. Balance as on 1/4/2022. Then we'll add restated profit of previous year. This will become restated balance as on 31st March 2023, means as on previous year end. Then we'll add profit of current year. So this will become balance as on 31st March 2024. Have you understood this point? So always in exam do in this way. First find out balance at the beginning of previous year. Then give plus minus cumulative effect due to changes in accounting policy. So this will become restated balance at the beginning of previous year. Then add restated profit of previous year. This will become restated balance at the end of previous year. Then add profit of current year. This will be balance as at the end of current year. This becomes the format from examination point of view. So normally they ask this and this, extract of SOPL and extract of SOK in exam. Extract of SOPL and extract of SOK in exam. SOK means so jao. Understood? Correct. So this become what? Changes in accounting policy. There is one point. I have seen one MCQ they have given for this point also, but I mean this was not expected. But I find they have given one MCQ based on this also. What is this point? Sometime what happened? The entity has not applied a new Ind AS because new Ind AS was effective not from current year, it was effective from future year. So of course will not apply in current year, will apply in future year. Correct now. So when an entity has not applied a new Ind AS that has been issued but is not yet effective, the entity shall disclose the fact, this fact which disclose is there is one new Ind AS already introduced, and the possible impact of that application of new Ind AS will have on the entity's financial statement in the period of initial application, means when that will be applied, what will be the impact in the current financial statement, that need to be also disclosed. Understood? Means this is only for disclosure point of view, but I have find one question in MCQ where they have asked these 2 points. Chalega? Understood? So it is what in the period of initial application. Chalega? Okay, sir? Okay. Then changes in accounting estimate. This does not require much discussion. Ki changes in accounting estimate. Ki of course accounting estimate may change whenever we have taken some estimation. If that estimation change, that is changes in accounting estimate. For example, changes in useful life of the asset, changes in the residual value of the asset, changes in the depreciation method of the asset, provision amount estimation, that changes. Correct now? Understood? Correct. Or any expected credit loss, means impairment loss of data that require any changes. So these all are based on estimation. So this will be known as changes in accounting estimate. Now changes in accounting estimate may result with new information or new development. Whenever there is a new information or new development, normally we change our accounting estimate. Correct. One clarification has been given that the changes in measurement base are not changes in accounting estimate. For example, when you have changed from revaluation model to cost model or vice versa, this is not changes in accounting estimate, this is changes in accounting policy. This is changes in accounting policy. So any changes in measurement base will be changes in accounting policy. But sometimes what happen, any changes happen, but we were not sure about whether it is changes in accounting policy or changes in accounting estimate. So one clarification has been given by Ind AS said that in that case, consider that change as changes in accounting estimate and do prospective accounting. So whenever there is a doubt about that changes, whether it is changes in accounting policy or changes in accounting estimate, then what will prefer? Changes in accounting estimate, and do which accounting? Prospective accounting. Correct. Accounting treatment is very simple. The effect of changes in accounting estimate shall be recognized prospectively. That is by including that changes the effect in the PL in the period of change. If the change affect the period only, or in the period of change as well as future period, if the if the changes affect both current year as well as future year. Simple. Done. Disclosure you can read. Now prior period error. Now when I say error are always prior period. It cannot be current year error. Correct now? Understood? Means thoda sa, if I will explain in a better way, just try to understand. Suppose this is the previous year and this is the current year, and we are discussing about which year? Which error? This error. This error now. This is the current year. Now if suppose this error is identified in previous year only and rectified in previous year, so whether it is an error, then it is not an error, not covered under Ind AS 8. However, in foundation level used to do this is also an error, but now this is not an error. They are already rectified now. Now suppose this is date of approval and some error was identified yahan par. Quite possible this error. But adjusting, non-adjusting, adjusting event, non-adjusting event, adjusting event. So this is also rectified or not? This is also rectified in this year only, and therefore this is also not an error. This is an adjusting event. So already Ind AS 10 will be applied. Now some error is identified yahan par. Identified yahan par. So this will become what? Error. This will become error, and what will be applicable? Ind AS 8 will be applicable. Ind AS 8 will be applicable. Understood this point? So what do you mean by error? Error means what? Ki any omission or misstatement, any omission or misstatement in financial statement of one or more prior year will be error. Now this error includes fraud also. So now this error includes fraud. So if you have done some intentional mistake, that will be also error. So error now include intentional as well as unintentional mistake. Now this para is very important. Note what they are given. The error arises from failure to use or misuse. Failure to use or misuse. Misuse means fraud of reliable information that was available when the financial statement were approved. That was available when financial statement were approved. When approved and could have been obtained and taken into account with reasonable effort. Understood? So error arises from the failure to use or misuse of reliable information that was available when the financial statement was approved and could have been obtained or taken into account with reasonable effort. I'll just give you one example. You will say me whether it is an error or not an error. For example, this is previous year, current year, and this is the date of approval. Date of approval. Now, just think. Suppose there is a manager whose salary was 1 lakh per month, and this is already recorded in previous year. But before approval of financial statement, management decided to increase the salary by rupees 10,000 with effect from the beginning of previous year. With effect from the beginning of previous year. With effect from the beginning of previous year. I hope you are understanding. It means, can I say 10,000 into 12 is related to previous year or not? Is related to previous year? Is related to previous year? Now the question is that first to think about Ind AS 10, whether adjusting or non-adjusting. Adjusting or non-adjusting event. Adjusting non-adjusting event. Till now we have not done Ind AS 10, but you have done Ind AS 10. Adjusting non-adjusting. Huh? Bolo. Adjusting event, non-adjusting event. Of course, it is an adjusting event. It is an adjusting event. You can say this increase was for which services? These services, na. So there was a condition already prevailing on balance sheet date, for which we got some evidence after what? Balance sheet that it is an adjusting event. Can I say already adjusted to not an error? But if not adjusted, so can I say it become an error? If already adjusted in the books of account, it is not an error. But if not adjusted, so this information was available when financial statement was approved and could have been obtained or taken into account with reasonable effort. Therefore, it will become an error if it is not adjusted. But suppose the same thing I said, the manager decided to increase after approval of financial statement. After approval of financial statement, first बताओ adjusting non-adjusting outside the scope of which chapter? Now whether it is an error. Have you understood the question? Once again. The management increased the salary after approval of financial statement. So of course it is outside the scope of Ind AS 10. Outside the scope of Ind AS 10. Now the question is that whether it is an error. Whether it is an error. No, because this information was not available when financial statement was approved. So how it can be an error? So this is not an error. I think this example has given more clarification about this point. Note number 1. Now correction of error will be done by retrospectively restating the amount. Means corrected on retrospective basis. Corrected on retrospective basis. Now two situations may arise. What they are saying? If the error relate to previous year only. If error relate to previous year, then can I say the rectification will not affect the opening balance of previous year? The rectification will not affect the opening balance of previous year, no? If the error happened in previous year only, so rectification will not affect the opening balance of previous year. So only we need to restate the previous year figure. Only we need to restate the previous year figure in SOPL, in balance sheet, and in SOK. And the third balance sheet is not required. Why third balance is not required? Because it will not affect the opening balance of previous year. But if the error happened in any year which is prior to what? Previous year, then can I see it will affect the opening balance of previous year. First find out cumulative effect. Give adjustment to what? Asset, liability and equity of opening balance of previous year and then restate what? The comparative figure, and in this case third balance sheet is also required. Understood? Correct. Done. Chapter over. Same exception to retrospective restatement is similar to what we have done for changes in accounting policy. Same exception is given for retrospective restatement. One more clarification. When I say changes in accounting policy, so that is retrospective application of accounting policy. When I say correction of error, that is retrospective restatement for the correction of error. So it is terminology different. That is retrospective application. This is retrospective restatement. Understood this point? Yes, sir. I think the balance point you can do. All questions you can do. However, recently now in RTP, one very good question was given in the last, this year, not last year RTP, I think so. That you do. That is a good question. When in that question they have given changes in accounting policy, changes in accounting estimate and error also. Okay, na? That question I don't have. You can do that question by row. That is a good question. You want me to do that question? What is your doubt? I understood your doubt. There is a question in ICAI study material. Doubt came from there. What is doubt? That question I know because that is the most doubtful question in my Telegram group. Even though I have explained 100 times in class, then also doubt will come. Because in class so no one listen only. Okay, na? Now what was the question? Question was what? Suppose there was some property, plant and equipment, there was some current liability and there was some non-current liability. So this current liability was wrongly reclassified to non-current or vice versa. Means reclassification may previous year there was some reclassification issue. Means there was some current liability which have been either reclassified to non-current or non-current liability has been reclassified. Current liability has been classified as non-current or non-current has been classified as what? Current. ऐसा कुछ question था. Correct. Now whether it is an error. First question they have asked whether it is an error. Yes. Classification error. Classification, wrong classification is also an error. Wrong classification is also an error. So of course can I say in the current year we should restate the previous year figure. Restate the previous year figure, and current year they will do correct classification only. Now doubt happened whether third balance is required. So just try to, liability has always opening balance. Liability has always opening balance. So when they have said liabilities, so you can't assume now it does not have opening balance. It may have some opening balance. So if previous year there was some mistake, so in previous to previous also there was some mistake. So it means opening balance need to be also reclassified or not, and therefore third balance sheet is required. Third balance sheet is required. Understood? For all the balance sheet items. Asset also. Correct? Okay. Chalo. So Ind AS 8 is completed. Just one question. First you do. If you have doubt, I will take that question. Okay. That question I will inform you. That's a good question. चलो ठीक है. First let me complete Ind AS 1. Time is not permitting. Ind AS 1 क्या पढ़ाएंगे Ind AS 1 में? You want me to teach Ind AS 1 also? Yes sir. No sir. Ind AS 1. I will just concentrate on what? Special point. I will just concentrate on all special point. So presentation of financial statement. So of course presentation of, when I say presentation of financial statement, that is based on Ind AS 1. Means this Ind AS deals with the content and format of what? Financial statement. But when I say financial statement which is dealt in this chapter is what? Balance sheet, SOPL and SOPL and notes to account. Statement of cash flow will be as per Ind AS 7. Statement of cash flow will be as per Ind AS 7. So what is the meaning of general purpose financial statement? When I say financial statement, it is nothing but general purpose financial statement. The correct term is general purpose financial statement, commonly known as what? Financial statement. Correct. So what is the meaning of financial statement? Which are any financial statement which is intended to meet the need of user, that become general purpose financial statement. Now what is a complete set of financial statement? A complete set of financial statement will include what? A balance sheet, a SOPL, a SOK, a statement of cash flow, a notes to account, a comparative information in respect of preceding period, and third balance sheet if an entity apply an accounting policy retrospectively or make a retrospective restatement of item in the financial statement, or when it reclassify item in the financial statement. Your doubt over? When it reclassify the item in the financial statement, then also what is required? Third balance sheet is required if it affect the opening balance of previous year. Understood? Okay. Then there are some features of financial statement. First is true and fair view that you do by your own. I am not reading it. True and fair view बचपन से कर रहे हो. But one question arises: can we depart from Ind AS? This true and fair view means what? Ki entities would apply all the requirement of Ind AS. All the requirement of Ind AS. All means all. All means all. Understood? And therefore they should give an explicit and unreserved statement of such compliance of Ind AS in the notes to account. If they are following all the requirement of Ind AS. Now the question is that we have understood that entity need to follow all the requirement of Ind AS. But can we depart from Ind AS? Can we depart from Ind AS? It is a rare situation. A rare situation. Normally entities do not depart, but yes, we can depart. But if you depart, you should disclose all these points. You can depart, but you should disclose how many points? 6 point disclosure requirement. So management has this, you can read, yes, we can depart, but the following disclosures are required. Understood? Then going concern, you can do by your own what to teach. Accrual basis, you know. Materiality and aggregation. What is the meaning of material? So this might be also important for MCQ. What do you mean by material information? Any information is material. Any information is material. If omission of such information, misstatement of such information, or obscuring of such information. Obscuring is a new term added in the definition of materiality through an amendment. So either omission, misstatement, or obscuring of that information, it could reasonably be expected to influence the decision of primary user of general purpose financial statement. Primary user, not all the user, primary user. So if it can affect the decision of primary user of financial statement, then it become a material information. Primary user means who rely on the financial statement. Can you just try to? There are two party. बचपन से किया, internal user, external user. Internal user is basically management. Can management know everything? If they are doing fraud, they are aware of that or not. So they will not go through financial statement for taking any decision. They know all the ifs and buts of the entity. So who are interested in financial statement? The other party, na. Suppose I am the shareholder, I am the investor in Reliance Industries. So I am interested because I am not the director of that company. So I become what? Primary user of what? Financial statement. But Mukesh Ambani is not what? Primary user of financial statement. Understood? So that is the meaning of primary user of general purpose financial statement. Okay, this you can read then. Understood? Then offsetting, this you can read, this frequency, comparative information. So what they say ki an entity shall present a comparative information in respect of preceding period for all the amount presented in the current financial statement. However, there is minimum comparative information. Minimum means they should prepare as minimum 2 balance sheet, current year, previous year, 2 SOPL, 2 statement of cash flow, and 2 SOK. But can we prepare any additional financial statement? Means can we prepare third SOPL, third SOK? Bola yes, because this is minimum. This is minimum. So if you want to prepare, you can prepare. So additional comparative information, well, entity may present, may means option, may present comparative information in addition to the minimum comparative financial statement required by Ind AS, as long as that information is as per what? Ind AS. Correct? It means, can I say, I mean right now I'm not saying about third balance sheet. Third balance sheet means what? When that 3 conditions satisfied. I'm not speaking about third balance sheet. In normal situation, means there is no changes in accounting policy, there is no correction of error, then also we can prepare additional balance sheet. Means one balance sheet and two balance required. Means when I am saying balance sheet, so two balance sheet, two SOPL, two SOK, and two statement of cash flow. And can I say we should also give the comparative, we should also give the related notes to account for this. Now, can I say I can prepare third SOPL? Now, if I am preparing third SOPL, should I prepare third balance sheet, third SOK, third statement of no, not required. Means you can prepare only what? Third SOPL or third balance sheet or whatever you want. But whatever you are preparing for, the related notes is also required. Related notes is also required. That is given. When this is the case, entity shall present the related note information for those additional statements. Consistency and presentation you can read. Correct now. Changes in accounting policy, retrospective restatement, reclassification, you have understood third balance required. So third balance required when two conditions are satisfied. First condition, it apply accounting policy retrospectively or make retrospective restatement or reclassify item in the financial statement, and due to that retrospective application or retrospective restatement or reclassification materially affect the opening balance of previous year. Means what is the second condition? Because of that has the material effect on the information in the balance sheet at the beginning of preceding period. If means changes does not have material effect on the opening balance of previous year, then we can ignore what? Third balance. Then we can ignore third balance. So what is the keyword? Material effect on the information at the beginning of previous year. Understood? Chalo. Then structure and content, of course, structure and content of financial statement. So what Ind AS 1 says that there are some information which need to be given on the face of balance sheet. For example, EPS, can you disclose in the notes to account? No. EPS need to be disclosed on the face of what? SOPL. So there are some information which need to be disclosed on the face of financial statement, and the other information they have given option. Other information can be disclosed either on the face or in the notes to account. For example, just try to understand. PP, but that should be disclosed on the face. In the notes to account. On the face, but land, building, either on the notes or on the face. Option is there. Means you can also disclose on the face of balance sheet. But if you disclose on the face of balance sheet, it will become too lengthy and you will not be able to understand the financial statement, and therefore we disclose the other line item where? In the notes to account. But option is there. Option is there. Understood? Now means this type of question is now dangerous for MCQs. Previously तो नहीं आएगा छोड़. But now all points become important. Correct. So you can read now. Now an entity shall display the following information prominently. I have seen one question was based on this in ICAI MCQ question. One question was based on this. They should disclose this following information prominently on the financial statement. First, name of the reporting entity, of course we disclose. Nature of financial statement, of course we disclose whether it is consolidated statement or separate financial statement or individual financial statement. The period covered, of course we disclose. Presentation currency, of course we disclose, and the level of rounding off also we disclose. So we know what are disclosure requirements, but they will give some one bakwas point that will be out of the options. Okay? Balance sheet may balance sheet, you know the format. I am not disclosing, I will not do the revision of format, but there are some special point for balance sheet. DTA and DTL will be always classified as what? Non-current. Means DTA and DTL cannot be current, even though it meet the definition of what? Current. So there is one exception to the rule. Now what is the meaning of current asset and current liability? So they have given how many conditions? 4 conditions. If any one condition satisfied, become current asset or current liability. First, it is expected to be realized or consumed or sold within normal operating cycle. I hope now you know what is operating cycle. Operating cycle means what? Operating cycle of the entity is the time between the acquisition of asset for the processing and their realization into cash and cash equivalent. Means it is the sum total of this. Sum total of this means what? Average holding period of raw material plus average holding period of WIP plus average holding period of finished good plus average realization period of debtors. This become operating cycle. This will be given the question means they will give 2, 3, 4, 5, 6 total karte na, that become operating cycle. Means operating cycle can be 12 months or less than 12 months or more than 12 months or more than 12 months. One clarification has been given that suppose you are not able to identify the operating cycle of a business, then assume 12 months. Then assume 12 months. And multiple business, suppose the entity has multiple business, you need to identify operating cycle for each business which can be different from other business. Understood? Yes, sir. Second condition, it is expected to be realized within 12 months from the reporting date. Third, it is held for the purpose of trading. Now you know what is the meaning of held for the purpose of trading. We have done where? In financial instrument chapter. And it is cash and cash equivalent unless the cash and cash equivalent is restricted from being exchanged or used to settle liability for a period more than 12 months after the reporting date. For example, suppose I will say cash and cash equivalent. Suppose you have deposited some amount in bank balance. Correct? Understood? And this bank balance is restricted. And this balance can be used to pay only one liability. And this liability will be settled after 12 months from the end of reporting period. Then this cash bank balance will be non-current asset. This will not be a current asset. Understood? Have you understood? Yes, sir. Now coming to current liability, it is expected to be settled within normal operating cycle. It is due to be settled within 12 months from reporting date. It is held for the purpose of trading. Now you know liability can be also held for the purpose of trading. For example, derivative liability. And it does not have unconditional right to defer settlement of a liability for at least 12 months after reporting date. So this is nothing but any loan which is repayable on demand. So any loan which is repayable on demand will be always what? Current liability. You can see, I think most of the point you have understood. Only one point. देखो यहाँ पे लिखा it is expected, यहाँ लिखा it is due. So both are different. Means for current asset, we need to find out the expectation of management. But for current liability, it is due to be settled. Means not based on expectation of management. It is based on the contractual date. But in the first point, it is expected and expected only. So be careful about these 2 points. Chalega? Yes, sir. Done. Now there are some special cases. These 3 special cases are important. For example, FD with a bank. Now we know that FD with a bank can be classified as cash and cash equivalent if the maturity period is 3 months or less than 3 months from the date of acquisition. So then it will be cash equivalent, then it will be under current asset. But any FD which are not cash and cash equivalent, then what we'll do? Then we need to find out whether it is realized within 12 months or after 12 months from the end of reporting period. Can you say within 12 months it become current asset? After 12 months it become non-current asset. Now the question is that it will be shown where? But if it is within 12 months current asset, then it will be shown where in the balance sheet? It will be shown under other bank balance. Other bank balance under financial asset. Other bank balance under financial asset. But if it become non-current asset, then it will disclose under other financial asset under financial asset. Under financial asset. Understood? Correct? Yes, sir. Now bank loan payable within 12 months from reporting date. Any bank loan which is payable within 12 months from reporting date. So what they want to say, any loan due to be settled within 12 months after the reporting period is classified as current liability, even if the original terms was a period for longer than 12 months, and if the agreement to refinance or reschedule payment on a long-term basis is completed after balance sheet date. Okay. Let me take one example because I know you are not listening. When I only say तो सब ऊपर से जाता है ना, सब ऊपर से जाता है ना, बोलना रे, सुन रहे हो आप क्या मैं बोल रहा हूँ? Are you listening? अरे बोलो, नहीं सुन रहे हो, चलो इससे बता देता हूँ. because I know where importance, where concentration is required high. This can be asked in exam. So suppose this is 31st March, this is the date of approval. Date of approval. Now apply. If you have understood, say whether what is the correct answer. Suppose there was one loan, bank loan, which is payable within 3 months. Within 3 months. So of course classified as current liability. But an agreement has been done before approval of financial statement to reschedule what? The payment schedule. And now it has been agreed. Bank has confirmed also. It is payable after 5 years. It is payable after 5 years. Understood? Adjusting, non-adjusting. Understood what I am saying? Before approval of abhi loan was what? Payable within 3 months. So it is classified as current liability, no doubt about that. But before approval of financial statement, bank agreed to reschedule the payment on a long-term basis. Now it is payable after 5 years. It is current, non-current? Not. Means you are not listening. Now it means you are not listening ना. इसे बोलते हैं सुनना बहुत जरूरी है. क्या लिखा है समझो. The loan will be classified as current liability even if the original term was for a period longer than 12 months. First condition, okay. And even if the agreement to refinance or reschedule payment on a long-term basis completed after reporting date, even if it is before approval of financial statement, it will not be classified as non-current liability. It will become current. It will remain current liability only. Understood this point now? Now you will not do mistake. It can be asked in exam. Then one more point. Just try to understand. Just try to understand. Suppose everyone. Suppose there is one loan which is right now payable within 3 months. Payable within 3 months. Now entity has a discretion. Sunna. Entity has a discretion to refinance or reschedule. Means the right to refinance or reschedule is with whom? Entity. Bank has given the right to whom? Entity. And they are expecting to what? On balance sheet they have an expectation to reschedule the payment. Are you getting what I am saying? There was a loan which is payable within 3 months. And now entity has a discretion to refinance or reschedule, and they are expecting to refinance or reschedule on balance sheet date. But it will be classified as current or non-current? Non-current. It will be classified as non-current. That is only given in this para. If you can read it. One more point. Now, you suppose same example. Loan 3 months payable within 3 months. Now they do not have discretion. They do not have discretion. Means the bank has not given them any right. They do not have any discretion to refinance or reschedule. But they are expecting. They are expecting to refinance or reschedule, and they have a potential. They have a potential to refinance or reschedule. बताओ. It will be current. Sir, ये होगा तो sir ये पूछे तो current ही होगा ना. It is current only. Okay, 100% applied your common sense, but 100% correct. Understood? So these 2 points are very important, can be asked in exam. So this type of question can be asked in this chapter. In this chapter, already asked, can be asked. Then breach of provision on long-term loan agreement. Breach of this is also important from exam point of view. Now what they say is, suppose if there is any long-term borrowing for which any breach happened on or before reporting date. On or before reporting date, and with the effect of breach, this loan become repayable on demand. So if it become repayable on demand, then it will be classified as what? Current liability. So on balance it become current liability. So already it become loan repayable on demand, and it is classified as what? Current liability. Now what are the situations? What they are saying? If there is a minor breach, will I ignore it? Then do not classify it as current liability, because minor breach is minor. Ignore that. It will be classified as non-current liability. Non-current liability. But if major breach, So how can we understand minor major? As per the information given in the question. As per the information given in the question. ठीक है ना? If the breach is rectified before approval of financial statement, breach is rectified by the entity before approval of financial statement, then it is an adjusting event. It will be classified as what? Non-current liability only. But the breach is not rectified before approval of financial statement. Correct? And the lender means bank. Bank agreed not to demand payment as a consequence of the breach after reporting date. Means bank agreed that they will not demand. Then also it is an what? Adjusting event, and this will become what? Non-current liability. So in this case also it will be classified as non-current liability. Last point what they say, if the suppose rectification not done and the bank also has not agreed to refinance. So one situation arises, if the bank agreed by the end of reporting period, by the end of report means before reporting date bank has agreed. If the bank has agreed by the end of reporting period to provide a grace period of more than 12 months after the reporting period to rectify that mistake. So grace period allowed is more than 12 months, then it will be a non-current liability. But if the grace period is less than 12 months, then it will be classified as what? Current liability only. So in all other cases, it will be classified as current liability. This is very, very important, can be asked in exam. I think in day 1, my job is up to this only. After that, you can read, you can understand. Format, of course, what to teach, format to पढ़ लोगे ना, format पढ़ा है. SOPL just read because you know PL, OCI, everything now you know. Now I think PL, OCI in regular class, of course, when you are doing for the first time, everything is important. Now you know about PL, OCI. Reclassification adjustment also you know. Correct. This point is thoda sa important. Now what Ind AS 1 says that there are some items of income and expense. There are some item of income and expense which are material, should require separate disclosure. So when the item of income and expense are material, entities shall disclose the nature and the amount separately. And they have given some examples of such items. Examples are write down of inventory to NRV or reversal of such write down. Write down of PP2 is recoverable amount and the reversal of such amount. Restructuring activities means any provision for restructuring and reversal of such provision. Profit and loss on disposal of PP, profit and loss on disposal of investment, discontinued operation, any litigation settlement, any other reversal of provision. Correct. Now why it is so important? Because Ind AS 1 required disclosure, but if you read the format, this format is not given by Ind AS. The format is given by Schedule 3, Division 2. So when you read this format, they have given one exceptional item. So one doubt will come whether this exceptional item and this Ind AS 1 wala point batch is same or different. Because Ind AS 1 has not used the term exceptional item. So one doubt will come whether this point number H and this exceptional item are same or different. So exceptional item has not been defined under Ind AS 1. And now there is no concept of extraordinary item. There is no concept of extraordinary item. So one clarification has been given. This question has been given in RTP also. Ki whether all material item are exceptional. And arguing this question they have asked whether all material item are exceptional or all exceptional item are material. One question have been asked in this way in RTP. You can refer my question back. So exceptional item has been defined in AS 5. And AS 5 says that any item of income and expense which are related to ordinary activities are of such size, nature, incidence. Such size means amount. Nature and incidence means impact. Are of such size, nature that their separate disclosure required to understand the performance of the entity. That will become what exceptional item. Means size means material. But with material there are two more terms, nature and incidence. Means can you say all material item may or may not be exceptional? All material item may or may not be exceptional. So all material item are not exceptional. Are you getting what I am saying? But all exceptional item are material. So then they have given explanation. This Ind AS 1, whatever they have given, this is nothing but exceptional item only. Means they tend to, means in schedule 3 the name has been given what? Exceptional, by referring this point only. By referring this point only. Understood? Have you understood? Then there is one more point in SOPL. They said all the expenses will be classified based on nature, not based on function. So all the expenses will be classified based on nature, not based on function. We do that only: employee benefit expense, finance expense, depreciation expense, other expense, but we don't do admin expense, selling and distribution expense. That is not allowed in India. So based on function, that is not allowed. Based on function is not allowed. Only based on nature is allowed. Understood? Correct. One more. SOPL will consider only single statement. In one statement, there will be two part PL and OCI. We can't make two statements. We can't make two statements. PL and OCI. Two statement is not permitted in India. Two statement is not permitted in India. Understood? Now you know PL, OCI. These two you can read. I think these are also done. SOK. I am assuming that you know SOK में क्या पढ़ाना. SOK you know statement of changes in equity. Nothing to teach. Statement of notes to account done. Ind AS 1 done. Ind AS 1, once again I will say, read all the questions of ICAI study material. Read all the solution also. Don't give much time on that. But whatever question you are finding good question and for which you have taken more time to understand solution, just give star mark. Because if that question will come, you will not be able to write in exam. So they have given some questions. So if you are finding a question good quality, so that question require revision before exam. However, once again, this is totally based on what Ind AS content. If you know the content, you can answer any question. Chalega. Thank you very much for today. ठीक है ना? Okay. Tomorrow timing will be more or less same only. Or actually your AFM will start from 6 to tomorrow only. Tomorrow it will be 6 AFM. If any changes, will update tomorrow only. ठीक है ना? Okay. So if 6 तो I can say like that only ना. ठीक है ना? Okay. Yeah, I'll take some early. You want some break? ठीक है ना? इसी में कल का मेरे को लगता है खत्म हो जाएगा. कुछ है नहीं. अच्छा, tomorrow what will do? एक चेक कर लेते हैं. बताओ ना क्या क्या है? 33 will take I think 1.5 hour or 2 hours. 1.5 hours. Then 34 half an hour. 101 analysis of financial statement. So it is based on question only. Schedule 3 requirement है. अच्छा, professional and ethical duty, and this I will say, I just go through some important point. But if you are doing for the first time, better you see my amendment class already recorded in what? Already uploaded in YouTube. Same accounting technology I will soon upload in YouTube only, so that you can refer. So these two I will say better you see the entire chapter if you are doing for the first time. If you are doing for the first time, second time if you are doing, then I will discuss some small point about professional and ethical duty. ठीक है ना? But that you will not understand. हाँ? वो कर एक Ind AS 10 भी बाकी है. Ind AS 10 we have not done ना, तो छूट गया. ठीक है ना? Ind AS 10. ठीक है. तो विल मीट टुमारो एट द सेम टाइम और 10 बजे मिल रहे हैं टुमारो. हाँ, मैं भी 11 बजे मिलते हैं. थैंक यू वेरी मच. विल मीट टुमारो. टिल देन बाय बाय. टेक केयर. एंजॉय योर रिमेनिंग डे. बाय बाय.